we still are tracking above trend. That is a backdrop that corporate credit and I think risk assets broadly can manage. If they are not cutting because they are concerned, to Anne-Marie's point, about upward pressure on inflation or disruptions in supply chains, that sort of thing that would cause inflationary pressures, that's another issue. But they are also focused on growth. I think it's not a foregone conclusion that tariffs could cause them to not cut or even hike because there could be a growth impact that they are focused on as well.
We could see some major changes. Amanda, it's good to see you. Appreciate your time. Amanda Lanham there of BlackRock on financial markets. It's good news that the president-elect has taken his time with a really important decision. And I think we should all bear in mind, it's only been 2 weeks. It's not even been 2 weeks since the presidential election. That aside, when we use words like messy and chaotic, I think it's important to identify why we're using those words this morning. It's not because of the president-elect. It's because of the co-chair of the transition throwing their own name into the hat to ultimately try and become the Treasury Secretary. That's where the chaos, if there is any, has come from.
And now it's bled on social media, with Elon Musk coming out, the first self-proclaimed first buddy who seems to be attached to the hip of President-elect Donald Trump, at Mar-a-Lago all the time, at UFC over the weekend, came out in support of Howard Lutnick. This is something, this tension, that President-elect Donald Trump would like to keep in the family, and I think the fact that it's spreading beyond the gates of Mar-a-Lago is what is unnerving them, and it is why they're now saying, if we cannot keep this in the house between these two men, we're going to have to look elsewhere.
The race continues with an update on stories elsewhere with your Bloomberg brief. It's Danny Berger. Hey, Danny.
Hey, John. Spirit Airlines has filed for Chapter 11 bankruptcy after competition from rival carriers and its failed merger with JetBlue put pressure on the budget carrier. According to the filing, its listed assets and liabilities are between $1 and $10 billion. Spirit had reached an agreement on broad debt restructuring with a majority of its loyalty and convertible bondholders. Federal contractors should expect massive cuts in the president-elect's efficiency drive. Vivek Ramaswamy made that comment on Fox News over the weekend. The billionaire is leading the efficiency task force with Elon Musk. He added, quote, "There is massive waste, fraud, and abuse right now. We expect certain agencies to be deleted outright." In sports, the Steelers held off the Ravens in a matchup of two of the AFC's top teams. Pittsburgh pulled off the win without scoring a single touchdown, thanks to kicker Chris Boswell going 6 for 6 on field goals. The win marks the Steelers' 8th over Baltimore in their last 9 matchups. Elsewhere, the Chiefs' undefeated season has come to an end after a loss in Buffalo yesterday. Bills QB Josh Allen ran for a 26-yard touchdown on the 4th and 2 to seal the win for the Bills, who improved their record to 9-2. And that's your brief, John.
Danny, thank you. Have you noticed the Trump dance going down in college football and NFL? How long before the joyless NFL ban the Trump dance?
Oh, you think that's the case? Oh, really? You're going to really get on top of celebrations? Come on, it's about sportsmanship.
They're getting on top of celebrations all the time.
I know they do. That's what I'm saying. It's not about the Trump dance, but it's, okay.
The Trump dance was all over social media at the UFC event as well.
I saw. The joyless NFL. Up next on the program, the fight for the top job in the Treasury.
They need to get, the Treasury pick right, the economic team pick right, because there's a lot of head scratching and concern in markets about the picks that seem kind of not up to the task.
Don't you prefer the over-the-top elaborate celebrations?
You know, I actually do, and my favorite part is when they try to celebrate without really seeming like they're celebrating, so they can't be cracked down. Does this count?
That's beautiful.
Thank you.
Unfortunately, you're not on camera right now. We're looking at a beautiful New York City. From New York this morning, good morning.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Equity futures right now on the S&P 500 firmer by not even 0.1%, but check this out in the bond market. We resume the climb. Yields are higher by 3 basis points, the 10-year 4.47. Under surveillance this morning, the fight for the top job in the Treasury.
These staffers all need to remember who got elected president, and it's none of them. And, you know, it doesn't serve the principal, their principal, President-elect Trump, very well at all for them to be going out in public. They need to get, you know, the Treasury pick right, the economic team pick right, because there's a lot of head scratching and concern in markets about the picks that seem kind of not up to the task.
So here's the latest this morning. The eyes of Wall Street on a battle royale playing out in Palm Beach, Florida. The race to become the next Treasury Secretary between Scott Bessent and Howard Lutnick reaching boiling point over the weekend. President-elect Donald Trump said to be losing patience with infighting, leaving staff to widen their search. Alternatives now including Apollo's Mark Rowan and former Fed Governor Kevin Warsh. Henrietta Trays of Vader Partners joins us now for more. So Henrietta, the big question, where is this one going?
Well, I think the most important decision really is about what happens with Robert Lighthizer, as you guys have been mentioning. I think there's very limited amounts that the Treasury Secretary is going to do in terms of writing tax bill with Congress. This isn't the first time around when we're crafting it out of thin air. That tax bill is going to be written by the Senate Finance Committee staff, the Chairman Mike Crapo, and the House Ways and Means Committee and their staff. And the Treasury Secretary is going to be influential to the street. But in terms of these massive pieces of legislation, it's tariffs and taxes. And I'm really more concentrated on where Rob Lighthizer is going to go than whether it's Scott Bessent or somebody else at Treasury right now.
Well, Henrietta, according to my sources, Robert Lighthizer is still in the mix, as well as Senator Hagerty when it comes to Treasury. What would a Robert Lighthizer at the helm of Treasury mean?
You know, what I'm wondering is whether he's going to do something in the trade czar universe. That seems to be the main theme of the Trump cabinet picks so far, whether it's the government efficiency initiative, which has sort of an efficiency czar, crypto czar, or Bob Lighthizer in a role that's more like a trade czar. He doesn't even need to be at Treasury. I think it's pretty unlikely that he would land at Treasury. I think the president-elect is enjoying this process of having a big fight for the transition. We definitely saw this last time around as well, so I don't think it should come as a surprise. But sort of a roving czar that has authority over USTR, the Department of Commerce, and Treasury is going to be much more important, in my opinion, than Treasury Secretary itself.
When you read the tea leaves, though, and you see that potentially, and sources are telling me that the team is trying to maybe give this off-ramp to Howard Lutnick, offer him a fancy first world-class ambassadorship. Potentially, then that would lead the way for either Scott Bessent to come up and get the nod, or they're going to expand the search because this is just becoming a little bit too messy between these two men. How do you read the tea leaves right now? And do you think there's going to be a timeline when we can get this nod?
Yeah, I think the Trump transition folks and people that I've spoken to who are working with them, they're trying to get as many names as possible. Specifically, we know that they're trying to get CEOs, somebody that comes with quite a bit of stature to come and fill that role already. They have not been able to find that particular human yet. And so we're still in the realm of the Scott Bessent, Howard Lutnick's component. I think Bessent probably for the most part has been out on the street the most, meeting with, big bulge bracket banks and hedge funds, talking about a very sort of slow, phased-in 5% a month increase in tariff rates. Those are the kind of things that I think when the details come out will spook folks. When it comes to the transition, the president-elect has actually moved very quickly I would expect the Treasury Secretary to be somebody that's confirmed within the first 2 weeks, let's say, in January. So they want to get somebody that's actually able to get through, not a Matt Gaetz-like candidate who's going to run into some serious ethical problems.
Right. When it comes to the Senate, obviously we think maybe the Treasury pose could sail through. But you said the president-elect was moving quickly. Why is it taking him so long when it comes to Treasury? This is one area where he's not moving quickly, even though he ran on an economic agenda.
Right. And there's not just a clear loyalist that he's planning to place. Some of the others, whether it's a Tulsi Gabbard or an RFK Jr., were overtly on the campaign trail. In this situation, the folks that would have been in that role have already said that they do not want to take on the position. When you hear things like, going through the ethics component and the background check is preclusive, which I believe Scott Bessent said a couple weeks ago, it gives you an understanding of just how difficult it is to make the decision for these folks to go through the ringer with the FBI, with background checks, with the disarming of their funds and really understanding where that needs to go. So I think there's a lot of personal decisions that go into Treasury in this role that are maybe a little bit higher bar than the Attorney General pick, for example.
Henrietta, how much do you see this as a test almost of how important the market response will be to Trump policies as sort of the ultimate check?
Well, I think the street is very heartened by the fact that they feel like they're playing a role in this. I mean, every single meeting I go to, investors think that the stock market, whether it's going up or down, has a real leash on the president. I don't think that that's true, just to put it bluntly, but it's definitely a view on the street that they have a say in what the Trump administration does, and specifically how Donald Trump responds. So they're very optimistic, for example, in the bond markets, that should his tax bill and tariffs go into effect in the same year, it's my expectation tariffs will go on in the first 4 or 5 months, and the tax bill be passed in December, July at the earliest, you're going to get these massive both inflationary and deficit finance pictures. And what I hear often is the bond market's going to send a message and stop that. That's just not the way that DC typically works. They are much more concentrated on, quarter over quarter GDP growth, unemployment rates. The president-elect has tweeted quite a bit about the stock market, but that's never led him to not impose tariffs, as we all remember from 2018 and 2019.
That said, Henrietta, we did hear from Mike Johnson, House Speaker, that there was going to be some sort of offset to any tax cuts. We heard from French Hill when he was on with us a couple of weeks ago that he's really going to be careful about not necessarily expanding the budget too much. Why do you think that ultimately that the market does not play the role that it thinks it does?
Well, first of all, it's not what Congress is watching. A tax bill is in existence for 4, 5, 6 years, 7 in the case of the last package. That's not, designed to boost the market on a day-over-day basis. President-elect Trump is going to be at the very beginning of his term, which is 4 years. Not every single day matters. It's just sort of a fundamental misunderstanding of how D.C. watches the U.S. economy and the stock market in general. And while I think President-elect Trump tweets about it, as I mentioned, it's very different than writing and crafting legislative policy that will increase the deficit by at least $2 trillion next year, whether the bond market responds or not. That's what it's going to take. That's what it costs. So when you talk about the government efficiency initiative, what I hear as a former budget staffer is really exactly the wish list that we get from an administration on the first Monday in February. You get the budget every year. It's very optimistic and wishful thinking. It includes a lot of offsets to offset the cost of the spending that you want to roll out, but ultimately very little of that actually gets effectuated. So when I hear the president and Elon Musk and Vivek Ramaswamy talk about government efficiency, what I hear is this is the thing that we'd like to do in a perfect world. It will not actually happen, but it's part of the conversation that's necessary to mitigate the appearance of deficit increases on the magnitude of $2 trillion, if not more, just to pass the existing tax rate.
We'll see. Henrietta, it's good to see you. Henrietta Trace there, Aveda Partners. The philosophy has shifted. In Trump's first term, the focus was on reciprocity, leveling the playing field. In the first term of Joe Biden, in his presidency, it was about national security's objectives and protecting industry. This time around, it feels like it's changed for Trump's second term. This time around, it feels like they're looking at trade as a source of revenue to offset tax cuts. And it's the relationship between the two that's worthy of more attention.
He's talked a lot about that. And to your point, Jonathan, the fact that there was this Trump put in Trump 1.0, does the bond market now become even more important for him this time around?
The conversation will continue. Coming up next on this program, we'll talk energy with Francisco Blanch of Bank of America from New York. This is Bloomberg.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Two-day losing streak on the S&P 500. Here's your bounce this morning. We're higher by not even 1/10% on the Nasdaq 100, a 5-day slide, bouncing back by 1/3% on the Nasdaq. The Nasdaq down every single trading day through last week. In the bond market, breaching 450 for the first time since May in Friday's session. The 10-year getting closer to doing that all over again. Yields higher by 3 basis points. Lisa, 10s at 447.
There's the positive upside surprises that we've seen from economic data. There's also some rhetoric from Fed officials talking about how they might not have to cut as quickly. And then there's a question around policy and what the sequencing is going to be. All of this leaves a very jittery bond market. And the economic data points this week of NVIDIA, Deere earnings, as well as Target and Walmart, to me, it might be the most important data points that we get. Because if you get strong retail earnings from, say, Walmart, what do you get in the bond market? Does that lead to a 455?
Just going to reinforce U.S. exceptionalism all over again. At whose detriment? Europe's. That's whose detriment. Euro dollar right now sliding back to 105.40. Off session highs, Europe not in a good place. Luis de Guindos, the ECB vice president, saying risks have shifted from inflation to growth, and haven't they just?
Yeah, and Gio Moek actually talking about how this is a region that needs a weaker euro in order to really get some of the growth that they're looking for. Talking about how just on the tariff proposals alone, you could see the euro depreciate to about 5%, to about parity, and that actually being necessary. It all leaves this question of where is the off-ramp? Has this all been priced in? Are people overpricing some of the pessimism, or is this just about right given some of the projections?
The next ECB meeting, December 12th. Under surveillance this morning, investors awaiting Donald Trump's Treasury Secretary pick. Money managers Dan Loeb and Carl Bass advocating for Scott Bessent, with Elon Musk backing Howard Lutnick. Former Fed Governor Kevin Walsh and Apollo's Mark Rowan also emerging as contenders. Lots of chopping and changing through the weekend.
Absolutely. This weekend, you really saw the tension that has been building in Palm Beach spread into the Twitter sphere. You have a number of market participants coming out and saying they're going to back this individual or not. And that is what seems to have nerved President-elect Donald Trump, and why the staff is looking at maybe there's other names we should throw into this ring. What I have a question for is whether or not Howard Lutnick, I'm told potentially they're looking at another place for him. If he is to accept, say, an ambassadorship, does that mean that can quell some of this tension and Scott Bessent can rise to the role, or are they really going to start from the drawing board once again and start interviewing fresh candidates?
There's a real larger question here, too, and I think that Peter Scheer of Academy Securities put it well. I mentioned this earlier, 3D chess or a 52-card pickup. I hated 52-card pickup. I always kind of resented anyone who suggested it. But there's this question of whether there is some sort of cohesive plan here about getting an agenda through, or whether it's really kind of just payback to different people who have really contributed to the campaign. That's the question mark in markets, and the reason why maybe you've seen some of the post-election euphoria fade, just because there is this lack of certainty about what's real and what was just simply lip service.
Even when you were a kid, were you throwing cards at people saying, let's talk about the deficit? I don't want to play games.
No, people would throw cards, and I'd say, I don't want to talk about that. I want to talk about the bond market.
Let's talk about the bond market. House Speaker Mike Johnson, don't throw cards at us, saying that Congress will, quote, do the math to make sure President-elect Donald Trump and his plan to end tax on tips is enacted. Johnson pledging to swiftly advance Trump's economic agenda once the newly elected Congress is in place. Once again, and we go back to a point we made about 10 minutes ago, the connection between what happens on trade and what happens here is important.
Right, because you want to use tariffs as revenue raising, then you can put into your legislation, as these are the pay-fors for the Oprah Winfrey of taxes that Donald Trump had promised on the campaign trail, expanding the child tax credit, no tax on tip, exemptions for Social Security taxes, the list went on, 50% corporate income, corporate tax rate, except there's going to be obviously some sort of nuance that if your production's made in the United States. The list goes on. What Speaker Johnson, though, is saying is that you can't have everything without, quote, doing the math, without having the pay first. Although I do wonder, is this something he directly spoke to President-elect Donald Trump about maybe this weekend when, you know, they were walking out into MSG?
Well, with this, there's also the issue of how much will Congress act as a check on Donald Trump? How much is this going to really be a pushback where, say, Matt Gaetz isn't going to get through, as Henrietta Trace was saying? Or are you going to say, basically, that Trump has a clutch over Congress and can be able to get through some of his proposals pretty clearly? And that's a real question mark when it comes to some of the other fiscal proposals as well, where there'll be pushback saying, we are worried about the deficit.
Wouldn't that be the most Elisa thing ever? Ringside seats, and she's trying to talk to you about the bond market as the fight's going on.
Well, yeah. Do you actually think you're going to offset some of the increase in the deficit?
My goodness, Bramo, never change. Trump's transition team also planning on making a federal framework for full self-driving capabilities a top priority for the Department of Transportation. Any new rules enabling autonomous driving likely to benefit the Tesla CEO Elon Musk, who's currently positioned in Trump's inner circle. That stock this morning, by the way, Anne-Marie up 6.4%.
Right, so this is obviously giving a boost to Tesla, maybe some of these other companies that are looking for this autonomous driving that need the regulation, but federal auto safety standards needs congressional approval. So even though maybe this is an idea that Elon Musk, the first buddy, has decided that he's going to back and he's pushing for, you have to go through Congress. What I think individuals like Elon Musk need to be educated about the U.S. congressional system and the U.S. political system is that there are checks and balances, and everything has a process.
Let's turn to energy. Bank of America's Francisco Blanch looking ahead to next year, writing, quote, the oil market has been pushed and pulled by bullish geopolitical risk and the prospects for a large surplus next year. OPEC Plus faces a difficult challenge, which likely requires continued resolve and possibly additional curtailments if balances deteriorate even further. Francisco's with us around the table. Francisco, good morning.
Good morning.
It's good to see you. Changes then. A new energy secretary potentially in the next year or so. We've got a nomination at least. What are you telling clients about that change and how different things could be under Donald Trump?
Well, there's a number of things that will likely come through out of the new administration, but I think most likely we'll see some of the LNG export permitting come back to the fore. Remember, that was posted under the Biden administration. And that's probably the biggest change. There will be others, potentially. There's the Paris Agreement discussion. Will the U.S. pull or not pull out of the Paris Agreement? But I think in terms of the immediate impact on production, remember, in America, prices determine how much output producers ultimately pull out of the ground. And I think the biggest risk to prices really is coming from tariffs, right? We have potentially a trade war here, and to me, the euro keeps. You talked about the euro going to parity. You talked about the Chinese yuan, what's going to happen to it once the tariffs get implemented, if they do. These are downside risks to demand globally, right? I mean, America first means commodity second, and I think we kind of start from that point. So look, it doesn't mean we're going to produce more oil and gas for sure, but again, prices will determine that.
So basically, are you saying that we're kind of in a range here and that you kind of see U.S. production as potentially the offset, the potential balancing fact, but ultimately you can't see prices going up too much and frankly, you can't see them going down that much either?
Well, I mean, remember, there's also some geopolitical elements to this. I mean, there's, of course, the trade war. There's also, of course, there's the potential price war. Remember, OPEC announced they're going to bring production back, which could exacerbate the downside pressure. But there's also the actual military war as well going on, right? We have Israel-Gaza. We have Russia-Ukraine. Whatever happens to those geopolitical events that we're going through right now, I think will also determine the path, right? Remember, under the first Trump administration, we had pretty severe sanctions on Iran, also on Venezuela. We've had Marco Rubio appointed as or nominated to be Secretary of State. He's an anti-Iran, anti-Venezuela hawk. So I think that could have an impact. Remember, we are 2.2 million barrels a day above their production levels when Trump left office 4 years ago. So that's one upside risk to the market. But everything else is pointing down.
So I got to be honest, the energy market's been so confusing over the past couple of years. It has been so hard to get a handle on, and it's been basically the Widowmaker trade for a lot of people. I'm just wondering how difficult it has been to get a handle of the supply-demand dynamic at a time where there's increasing use of different renewable energies, there's greater efficiency when it comes to different cars and other vehicles, and you see that in particular with China. How much does that really muddy the picture in understanding what the reaction function is in the market to growth and the potential read-throughs from these geopolitics?
Look, listen, you make a great point. At the beginning of the year, OPEC was coming up with 2.5 million barrels a day of demand growth this year. We're likely going to be under 1 million barrels a day. And a lot of it's coming from, as you pointed out, the Chinese moving to electric vehicles. Now 53% of cars sold in China are EVs. The Chinese, by the way, are exporting 800,000 cars a month. So they got a lot of cars to sell. They're piling up. And then the other thing that's going on is they've moved on a lot of their trucks to LNG, which is 30–40% cheaper than diesel as an energy source. So we've also lost diesel demand. So Chinese demand for diesel is down this year quite a bit. Gasoline demand is flat. And China, remember, has been 50% of demand growth for the last 25 years. So that's why I think we got this trend of, to your point, substitution efficiency, trade war, price war potentially with OPEC trying to get some market share back again. And then there is the actual military conflict that we need to figure out and the sanctions aspect of it.
Francisco, let's pick up on the price war. OPEC Plus, we have seen them put the actual price of oil above market share. You think 2025 that changes?
So in terms of bringing production back on OPEC side, well, it's going to be a tough call, right? Because they've delayed the increase twice already. And if they increase production, you know the spot price is going to fall because we have already a surplus coming into next year. There's a fair amount of production from Brazil, from Guyana, from Canada, even US of A is actually increasing production next year. So if you bring more barrels, the spot price of oil is going to fall vis-a-vis the forward, and inventories would build, which is contrary to what OPEC has stated they want to do. So that, I think, I will get us into a price war type scenario. So if OPEC increases production, we think prices could drop another $10 from here, maybe more.
I also wanted to ask you about your first point when it came to tariffs and how that might be a drag on the energy industry. Can it also be a solution? I say that because Ursula von der Leyen called President-elect Donald Trump and said, you know, we still got a lot of Russian LNG. Right. Maybe we'll buy more American LNG. Right. Can that be a solution to some of these potential trade wars?
I mean, 100%. It's a great point. I think both China and Europe will use their U.S. energy purchases or as bargaining chips in any negotiation on tariffs. So we'll definitely see more purchases on Europe and the U.S. On Europe and China side to try to negotiate a trade regime with the U.S. That's for sure a key part of it.
So just want to finish on this note. If I were sitting next to you at a UFC fight, I would ask you, should I be buying gold right now? Because ultimately, there's a real question about whether the run-up was just a head fake and whether we've seen really the wind blown out of the sails, and that's going to be permanent because of how much the dollar's gone up.
Well, so I think in the short run, we think gold could go down to $2,500 an ounce. And part of it is just that those tariffs, the downside risks. We're also seeing interest rates going up in the U.S., right? You talked a little bit about how the Fed may or may not cut now in December. These are important elements for gold because gold was pricing in a pretty steep rate cut path. If that doesn't happen, it's going to be choppy for gold for a bit. Longer term, it's about the budget deficit. Are we ever going to find a solution to this 7% budget deficit we're running on for the last couple of years? And I don't know. I think we have to ask Mike Johnson that question. But I mean, is he going to find a solution?
Yes.
He'll say yes. All right. So maybe you don't need gold. But I think the point is that, I mean, gold ultimately, if inflation comes back, gold will be a good place to be. So I would say maybe buy the dip in gold, and that'll be probably. I mean, I would still think $3,000 an ounce is kind of the target for next year.
25.94 right now, up by 1.2%. Francisco, moral of the story: do not go to a sporting event with Bramo. All right, Francisco Blanch at Bank of America.
Maybe somebody wants to talk about this at a sporting event. You
Ringside.
don't know.
Debbie Downer.
It's not Debbie Downer.
Absolutely not.
You know, what other people basically, you know, shoot the wind, have a discussion. This is one of those things.
Good stuff, Lisa. Gold's higher, Silver is too. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. In its latest attempt to reset investor relations, CVS Health is adding 4 new members to its board. The additions are part of an agreement with Glenview Capital Management, a hedge fund that's been pushing for changes at CVS. The Glenview CEO, Larry Robbins, will be one of the new board members. Firefighters in New York said that a voluntary evacuation over the weekend helped them protect more than 160 homes from a wildfire near the New Jersey border. The fire was 90% contained on the Passaic County, New Jersey side of the border and about 88% contained in Orange County, New York, where a state of emergency was extended yesterday. The fire's cause remains under investigation. Liberty Energy shares are rising in the pre-market nearly 6%, following news that President-elect Donald Trump has nominated CEO Chris Wright to lead the Energy Department. Wright, who has no previous D.C. experience, is a vocal advocate for oil and gas development, including fracking. Trump also said in a statement that Wright will serve on the newly created National Energy Council, which will be chaired by Trump's Secretary of the Interior nominee, Doug Burgum. And that's your Bloomberg Brief. John.
Danny, thank you. I, for one, like many others, think it's probably a good idea for the Energy Secretary to have some energy experience, even if they don't have some DC experience. Isn't that a good thing?
That is a good thing. I think most people would agree with you. Also, I think most people voting the way they did want to see outsiders going to Washington, D.C. instead of the Washington complex just feeding into itself.
True. It's a good point. Up next on the program, the American consumer gearing up for holiday shopping.
There's a lot of moving pieces, and that's why I would say even though we think the consumer's in a better spot, and will be slightly better into next year, it's certainly not a V-shaped recovery by any stretch of the imagination.
That conversation up next. Looking ahead to earnings from Walmart and Target just around the corner. From New York, this is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Let's check out the equity market. Equity futures on the S&P 500 up by 0.1%. We've all been waiting for the same thing, and it finally starts to happen. Some outlooks for 2025. The outlook drops from Mike Wilson over at Morgan Stanley. I was surprised by this one. 6,500, 11% upside. Mike Wilson, Morgan Stanley.
Yeah, you could also drive a truck through the range. I mean, you start talking about 4,600 to 7,500. I mean, this is like some of the potential bull cases and bear cases. This highlights how the crystal ball gazing season is particularly muddy at a time of quite a bit of policy uncertainty.
Delayed as well because of the election of the last few weeks, but that's a number on the board. It's a start. We'll get more in the next few days, I'm sure. Under surveillance this morning, the American consumer gearing up for holiday shopping.
There's a lot of moving pieces, and that's why I would say even though we think the consumer's in a better spot and will be slightly better into next year, it's certainly not a V-shaped recovery by any stretch of the imagination. The consumer is willing to spend, but they're very cautious and value-focused, and they want to see newness. And what we've seen from that is Amazon, Walmart, and Costco so far have combined for 70% of retail dollar growth this year.
So here's the latest. Big retailers, including Target and Walmart, reporting earnings this week ahead of a shortened holiday shopping season. Kate McShane of Goldman Sachs writing Target customers are resilient, yet on a budget, while Walmart is well positioned to continue driving solid earnings. Kate joins us now for more. Kate, welcome to the program. I want to talk about trade just to begin with. How battle-hardened are these companies from the trade war of a few years ago, and how well prepared are they for more of the same?
Yes, I think, frankly, the more discretionary goods you have and more that you're importing from Asia, the harder it is to manage. And so specifically to Target and Walmart, about a third of what Target sells is domestically sourced, so not subject to tariffs. And for Walmart, it's about 2/3 of what they source is domestically produced and not exposed to tariffs. So there is still quite a bit there in terms of exposure. The last time we did see tariffs happen, both Walmart and Target did take prices up. Frankly, most retailers did. And that's probably what will happen this go around as well.
Kate, I have to ask, especially ahead of Walmart coming out tomorrow with earnings, is Walmart still a retail company?
It's a good question. Yes, it absolutely is. But I think a lot of success that they have seen more recently has been with what they call their second P&L or their alternative revenue streams, which is them building out a media business, a fulfillment business, their marketplace, data ventures. And they describe it as an ecosystem, all in which to better serve the customer with. But there certainly is a lot more tech and a lot more to understand from an e-commerce tech standpoint than there's ever been before.
The reason why I ask, Kate, is because we also get TJ Maxx and Target, and I wonder if those are really the cleaner reads on just consumer appetite, the consumer pushback with price increases, those kinds of consumer discretionary trends that people often look to in the likes of, previously anyway, Walmart.
Yes. Well, you still get the true read of what sales are doing in comp store sales trends, which they report every quarter. And we do get color from Target and Walmart about what sales are doing on the consumable side and what sales are doing on the discretionary side. And for all the success Walmart has had this year in terms of growing and taking share, their discretionary still remains somewhat flat. It has not been growing, similarly to Target's.
Kate, do you still see, and I know we talked about this when you joined us in September when this was really one of the storylines in the consumer sector, do you still see individuals on the higher income cohort trading down, this idea of being more choiceful?
We definitely see consumers still being choiceful, absolutely. The trade down hasn't necessarily happened to a degree. I think the story of the consumer is they're employed, and they do have cash. And the Goldman view is that the consumer will stay healthy into 2025 based on how strong the labor market is. I think where we're seeing a little bit of weakness might be at the lower income consumer, just as they continue to deal with higher prices. Prices are still higher than they were a few years ago. But at the mid and higher upper income levels, you are still seeing good demand. It's just, again, using that word choiceful.
Before we get to 2025, I have to get to the holiday season. And I just have to ask, why does Black Friday now feel like an entire week? It was supposed to be just one day.
Yes, it absolutely does feel longer. I would even argue it feels like the whole month of November has turned into Black Friday. And we are contending this year with 5 less shopping days. We have a Thanksgiving that is the latest point in the month that it can be. And there's 5 less shopping days as a result of that. So you're even seeing differences year over year in terms of when you're seeing Black Friday ads and Black Friday deals. But it's all in the name, of course, to engage customers.
Has there been any signs yet? Because I already see the Christmas trees up. I already see the wreaths. I already see, get your holiday deals. So it's basically 2 months, Black Friday, 2 months. I'm just wondering whether we have any early signs of what the appetite has been like for the holiday season.
We don't quite yet, and that's why I think earnings are so important this week for Target and Walmart, because they will have a read into the first couple of weeks of November, and hopefully they will comment there about how sales are going or how they are relative to what we saw in October. So we'll definitely get a better read on that when we speak with them this week. I think data has showed, traffic data at the retailers has showed some acceleration into the end of October, early November. So it does look like you're seeing growth in traffic, which is a good sign. But again, we'll get it straight from the company's mouths this week.
Tree went up this weekend.
I knew it would.
I knew that was aimed at me.
I was completely
I felt it. It felt personal
Yeah,
too.
it was personal.
Saturday afternoon.
Really?
Yeah.
Fully dressed
Looks
or not
beautiful,
yet?
fully dressed.
Have a panettone as well?
Had a Pandoro, first one of the season.
Nice.
Yeah, ready to go.
I did. I walked by a Whole Foods and I saw all the trees outside, and I saw that the prices were the same this year as they were last year. I thought that was interesting, and I thought Jonathan Farrow right now is putting up his tree.
I'll spare you this conversation, Kate. Thanks for joining us this morning. We appreciate it. Kate McShane there of Goldman Sachs on the latest in retail. Home Depot, a number of years ago. Tree's still doing well.
I know. I was just going to say, yours
TK
is
gives
not.
me hell over the fact that it's fake and it's not real. I used to love a real tree, and now...
Yeah, what happened?
I don't know. I just didn't like going to the street in New York. It just didn't appeal to me.
Carrying it
dropping
through.
$200 on this fake horrible
Was
tree, or rather this real horrible tree.
Hold on a second. A fake horrible tree. Is it also the shedding? Does the shedding bother you?
You know me too well, don't you?
It's
the mess.
The
I like
mess.
it clean.
Exactly. It's like
But then you don't get the smell.
unpredictable.
I know, I miss the smell.
Yeah,
I do miss the smell.
You're going to have to get a bigger
I
candle.
miss the smell. But the lights are perfectly positioned on the tree.
I'm shocked.
You know,
This is my shock
Color
face.
coordinated.
Yeah,
I'll show you a
controlled.
picture in a commercial break, all right? Up next on the programme, Tom Kennedy. We do this every year. Tom Kennedy of JP Morgan, Mandeep Singh of Bloomberg Intelligence. We'll look out for this interview. Carl Bass of Heyman Capital Management, who started this on Twitter over the weekend on X, endorsing Mr. Besson. For Treasury Secretary, Elon Musk responding to him. We'll get his response to the response in the next hour on the programme, and then we'll catch up with the former St. Louis Fed President Jim Bullard on the Fed's path forward. The third hour of Bloomberg surveillance just around the corner.
In 2015, I was not optimistic because nobody was working on the hard.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel. reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Where markets are right now is maybe you could say in the easier phase of the optimism curve when no policy change has yet been implemented, and so kind of all options are still on the table.
When you look at the layers of promises which would grow the debt, complicated policies like tariffs, this is not going to be an easy situation.
The market is front-running economic announcements.
The reality is you may get a lot more fiscal stimulus before the end of this year.
Policy error probably is our biggest risk, whether it be from the administration or whether it be from the Federal Reserve.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Can we snap the 5-day slide on the Nasdaq 100? Equity futures this morning positive by only 1/3%. Going into the big one this week, earnings from Nvidia on Wednesday. That stock this year higher by 187% after climbing by 238% the year before. It's still flying high. At the moment, though, the focus is on this right here. The race to be the next Treasury Secretary in the United States of America. The list is long. Lutnick, Besson, Kevin Warsh, Mark Rowan, Senator Haggerty. I think there's others as well in the mix still at this point.
So President-elect, according to all my conversations over the weekend, seems to be frustrated by this fight that had broken out between Howard Lutnick and Scott Bessent. It was described to me as a knife fight, and this all really centered around Howard Lutnick, the co-chair of the transition, the producer of supposed to be the transition, vetting these individuals, throwing his name into the ring and saying, I actually want that post. So now you see the staff around the president-elect broadening the search, potentially looking at other people. The question I have, is this potentially an off-ramp? Because I do know that people are looking at where else could Howard Lutnick go, maybe an ambassadorship, so that either Scott Bessent rises to the top or they actually go with a dark horse candidate. The issue is when it comes to these dark horse candidates, Warsh and also Mark Rowan and Senator Haggerty, where do they stack up when it comes to things like tariffs? Because that is key to other members of Trump's team.
Whether it's coincidence or whether it's related, this has been part of the backdrop for why we've seen, or at the time we have seen, the fade in the performance of equities since the election. What you have seen is a retracement of a lot of it. As you do have this question around policy, and you do have a question around what the reaction function will be in the bond market. And ultimately, my question is, to Henrietta Trace's point, the markets are heartened to think that they have a role too. They have a seat at the table. Do they actually, or is that not as important as it has been in the past?
Based on experience, they do. And I thought we saw that time after time. Yes, they put tariffs up, but they backed away every time tensions started to boil over between the United States and China, and we saw that on repeat. As for this race to be the next Treasury Secretary, I'm totally with you. I think this is really important for financial markets. Kyle Bass, who joins us a little bit later this hour, is making the point that it's already starting to dent equity markets. So let's be clear, the S&P 500, the NASDAQ 100, the Russell, remember the big bullish calls on the small caps? All three trading below the closing level the day after the election.
And the big question here is about sequencing, right? Do you get the tariffs first before you get some of the other implementations? And then also, will there be across-the-board blanket tariffs from the very beginning? Is that the priority for this president, this next president, or is there something else that's on the table?
Here's the lineup this hour. Coming up, Tom Kennedy of JP Morgan as the post-election rally reverses, Kyle Bass of Heyman Capital Management on the fight over Trump's Treasury nomination, and former St. Louis Fed President Jim Bullard on why the Fed is in no hurry to cut. We begin this hour with stocks mixed. U.S. equities are raising more than half of their post-election gains as investors focus on the Fed's next move. Tom Kennedy of JP Morgan staying optimistic, saying we expect policies under the new administration to be pro-growth and continue the era of U.S. exceptionalism, seeing a year-end 2025 S&P 500 outlook of 6,400 and expect U.S. stocks to outperform the rest of the world through next year. Tom joins us now for more. Tom, good morning to you.
Good morning, Jeff.
Let's start with the price action of the last week. Why has this rally started to fade? What's behind that?
We're not drawing too many conclusions from this stalling as we're talking about it here. I think we're still digesting what the possibilities of outcomes could be for the Trump administration. And there are wide-ranging expectations, and so much is in the detail, so much uncertainty. I think what we did need to price was a pro-growth environment where you're going to see deficit spending, deregulation, some offsets from tariffs, but how far can that really go becomes the question. When we stack it up, it looks like a pro-growth environment.
The day after the election, that's what it felt like in the markets too, just pricing in this positive growth shock. This just drops from Goldman, their year-ahead outlook. They're arguing that the new policies won't change the basic path of the economy. They say this about the Federal Reserve: we expect consecutive rate cuts through Q1 and a slower pace towards the end of the cutting cycle to a terminal rate of 325 to 350. To put you on the spot, why are they wrong?
I don't think they're especially wrong. I think we have in our baseline that the Fed's cutting to 3.5. And in the long run, what drives interest rates is what the Fed does. And the Fed is myopically focused on getting their dual mandate inflation to 2% and the labor market at maximum employment. So I think that's going to be the focus. Will the policies of the Trump administration matter? Certainly. For us, I think it matters more in the sector orientation of the stock market. And this decoupling from China requires an industrial capacity build out that America hasn't seen for a long time. So we now can start to look at the equity market and say, as rates come down, maybe to 3.5 for the Fed funds rate, that should help catalyze some of this capital investment.
So then why isn't your target higher? That's not that big of a gain considering the year-end target that some people have for this year. You're talking about less than 10% gains for next year. Why not kick it up to 7,000?
Well, you're seeing the range on Wall Street as being very wide in certain scenarios, and I think that is validated by the Trump administration. But our baseline of just about 10% total returns from here is above historic averages, despite rates being high, and building on this theme of strength. Today, we're launching our outlook to our clients, calling it Building on Strength. A remarkable 2024 from a macro and markets perspective. Still think you can be more, but you have to temper your optimism and really get focused on the sub-policies that matter. And again, industrial capacity, AI, those are the things that should drive alpha in that market.
I guess the big check has been, and the thing that a lot of people have talked about, is there's real range anxiety, there's yield anxiety, sort of where are we going to go? Whether we, and Amanda Lyman was talking about this, a disorderly move in Treasury yields. What's that threshold for you when that starts to impede some of the bullish outlook for risk assets?
Yeah, historically, it's just about the speed of the move. And when you saw historically a 2 standard deviation move in 1 month, in 10-year Treasury yield, that's when it really mattered for the stock market. Right now, given how much volatility there is, that's about a 75 basis point move in 1 month. It is a lot of movement. Will it matter? Look, we're as worried as anyone about the deficit, but finding the catalyst where it matters is important. I walk around with a big deck like everybody from Wall Street, and it's got 7 or 8 slides on the deficit. Most of them are from my time at the Fed, and I haven't been there for 7 years. So worries can be around for a long time. But at the same time, what do you do about it is the question. A lot of my clients will say, I'm worried. Okay, I can trade you this dollar and take you to Europe. What do they say, John? No, thanks. I'm not interested in that. So we can find this time where investors are really worried, and that's going to be the catalyst. So far, I do see a little bit of change, a little more interest in gold, a little more interest in shortening up duration, but a broad worry that there's a better place to go and save in the world, I don't see it.
You've teed it up. How worried should the rest of the world be?
I think we're all going to worry about this. We'll come back next time. We're going to talk about it again. For the next several years, I don't think this is the catalyst that is going to drive a risk-off move. But it doesn't mean you don't adapt and you don't change. Again, can think about gold, can think about shortening duration, can also think about owning real assets.
More specifically, my question refers to global financial markets.
Yeah.
If it's not a problem for the Treasury market, is it a problem for everyone else? Mohamed Al-Erian came on the program in the last week and said that sucking sound is money coming away from the rest of the world into the United States. When you talk about US exceptionalism, what does it mean for global markets? Who's missing out on that capital, that investment that they could have got, and they're not getting any more?
It's mostly Europe. What you have is decoupling from China and the United States. And what's stuck in the middle is Europe that doesn't have the innovation that America has and doesn't have the manufacturing prowess that China has. That's where I think the sucking sound is. But I think what, referencing your quote from Mohammed, is that that's not deficit woes. That's just the natural progression of deregulation, of deglobalization. So they're two different worries.
Yep.
But as long as money is being sucked out of the world into America, it's really hard to sit here and say the deficit is the bigger worry.
Tom, can you have U.S. exceptionalism when potentially there might be disorderly policy personnel picks? We've seen that with some individuals that are unorthodox, that Trump wants to join his team, and we're unclear on where he's going to land when it comes to Treasury.
Certainly a risk. I think, can you still have exceptionalism? Yes. What underpins exceptionalism is a common law system that we all can agree upon and an independent central bank. I think we need those two things to persist, to really perpetuate exceptionalism and make sure that that sucking sound of capital from the rest of the world into America persists. That's what's necessary.
The good policies that the markets are picking up on, or at least good policies for the markets, deregulation, tax cuts, they have basically 2 years to try to get this done. But what we've seen from these picks so far, when you look at Matt Gaetz for Attorney General, when you look at Bobby Kennedy for HHS, does this basically show that they're wasting time trying to maybe get some unorthodox views through the Senate when they could have been hitting the ground running on these proposals that the market cares about?
Potentially. I think when you look at history of just looking at cabinet members and who's put up, there's almost always someone who's out there and you have to say, there's no way they're going to get pushed through. It's a way to speed up the process beyond that. This is the politics and not necessarily what I do. But is it going to change necessarily the economic landscape of what we have next year and how to think about markets? I don't think so.
Okay, well, to that point, I'm looking at this that you're unleashing today. It's beautiful. People should take a look at how lovely the charts are and your outlook for the year ahead. It's a wonderfully and perfectly collated, Was this put together before the election? Did this hinge on the election outcome, or was this basically written before then and then unleashed after just to make sure there weren't any surprises?
Big pieces of this were written before the election because the election is not what's going to drive markets in the long run. But big segments of our 2025 outlook were made after the election where there are policy changes that will matter. Again, incentivizing decoupling from China needs a ton of capital investment in AI, power, infrastructure. Those sections are new post the election. But the big point of this piece is to give our clients a sense of confidence to still invest, stay invested after a historic rally. It has been a monumental last 12 months. We all come on this program and we just get agonized about it. It's a fantastic time to be an investor, and wealth creation, how do you adjust from that too? Different spin on the problems that we do as investors.
Well, so all I can say is people have been coming on the show for quite a while saying, you need to get out of cash, get out of cash. Yeah. You're going to need to, you're going to lose you're going to use capital, you're going to lose out in returns. Guess what? We just saw a new record for money market funds at $7 trillion, and people are saying probably more is going to go in just because yields aren't going to be going down that quickly. Do you think that you need that pile of cash to come down in order to achieve some of the gains in risk assets, or is cash and sidelines simply a fiction?
I don't think you need the money to come out of money market funds, and in fact, it generally only happens when rates are getting cut aggressively that money fund cash comes down. What we do need to see is to see the cash that is in the system start to have more movement, see more lending, see more capital that we can actually see M&A and broader financialization continue to happen. That's, I think, going to fuel this growth and return in markets. But deal making is a key piece of our outlook too, that this should still actually come back to market. We should see, even if with higher rates, deal making activity come back, and that's where, to Anne-Marie's point, where deregulation comes into play.
A ton of people watching now might just have one question: market weight or equal weight? If I want to get some exposure to the S&P 500, what's the best way of doing it for the next year?
Equal weight is our outlook call for next year. And you made a good point. Like the broadening in small and mid cap was a big call this year. We had that call on in 2024. That was incorrect. Until recently did you see some broadening out. But the broader look back on the year is that we should have been optimistic. We came into the year 2024 more optimistic than consensus. We were not even close. I mean, it's just such a remarkable phase of what we do. Still think there's more strength ahead in our outlook, building on strength.
It's worth remembering as we look ahead to next year that if you look back last year to the 12 months forward, this is not the year people were looking for in any way, shape or form. 20% gains on the S&P, they would have been laughed at this room.
Yeah, also big tech dominance, once again, that also would have been laughed out of the room. Also, no recession anywhere in sight, that also would have been laughed out of the room. There's so many aspects of this that have been hard to gauge.
Also, how many Fed cuts were we supposed to have in 2024
7 or 8.
15.
Was it 15?
No, I'm kidding.
I forget because we repriced it 3 different times in the first quarter. Tom, it's good to see you. And then we got that inflation head fake, which turned out to be a head fake. Then they started getting worried about the employment situation. And then we had the Jackson Hole speech. I mean, we've gone back and forth a million times. Tom Kennedy of JP Morgan. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. President-elect Donald Trump's transition team told advisors that they plan to create a federal framework for full self-driving vehicles, clearing the way for mass adoptions. People familiar say the talks are still in the early stages. It is, though, welcome news to one of Trump's closest advisors, Elon Musk, who has promised that Tesla's self-driving cars will go into production before 2027. After gold's record-breaking year, Goldman Sachs predicts more upside in 2025. The firm reiterated a target for gold to hit $3,000 per ounce by December of next year. The strategist cited demand from central banks and Fed rate cuts. Gold is one of the firm's top commodity trades for 2025. Average U.S. gasoline prices are set to fall below $3 a gallon and already just a few cents above the lowest level since 2021. That dropped just in time for Thanksgiving, where holiday travel is expected to climb back to pre-pandemic levels. 71.1 million people are expected to drive by car for at least 50 miles in the 7 days around Thanksgiving. That is the most since before the pandemic. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next, the morning calls, plus Mandeep Singh of Bloomberg Intelligence looking ahead to the big one later this week. Earnings from NVIDIA. That stock is down at the pre-market by 3%.
Politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Outlook season is finally upon us. 6,500 over at Morgan Stanley year-end 2025. We just heard from JP Morgan's private bank. 6,400 on the S&P. Equities right now just about unchanged. Let's get you some morning calls. First up, HSBC upgrading Moderna to buy, saying the company is failing to properly value the company's pipeline. The stock is up by 2% in pre-market trading. Your second call from Needham, upgrading Robinhood to buy with a $40 price target, expecting shares to benefit from a Donald Trump presidency. The stock is up by 0.9%. And finally, Barclays raising its price target on Tesla up to $270, seeing attractive policy changes for autonomous vehicle efforts. The stock's up by 6% in the pre-market. Let's turn to NVIDIA. The information reporting the chip maker is facing a design snag for its advanced Blackwell chips. That report sending shares lower ahead of its highly anticipated earnings on Wednesday. The stock is down by 3%. Mandeep Singh joins us now for more. Mandeep, welcome to the show, sir. Let's get to Wednesday when we get those earnings from NVIDIA after the closing bell. What's top of mind for you?
Well, so everything that we have heard so far this earnings season from the hyperscalers has been very constructive in terms of, raising the CapEx, model scaling laws still holding up. So that should translate into a significant beat and raise for NVIDIA, as we have seen in the past 6 quarters. Now, with the change in administration, I think it's a positive for NVIDIA in the sense that they are exposed to crypto and autonomous driving with Elon Musk's, involvement in the administration. So that should actually expand the addressable market for NVIDIA. So net, I think we are in a much better spot when it comes to NVIDIA visibility now than we were 90 days back. And hopefully that should translate into quite a bit of a beat and raise this quarter.
Mandeep, that might be going forward in terms of the policy shift and what might be the backdrop. But I just wonder, the beat and raise, I want to dig a little bit deeper into where it comes from. How much is it from the hyperscalers? Is it from the Googles? Is it the Microsofts? Or is it starting to broaden out? Do we need to see that broadening out in order for NVIDIA to keep its gains?
Well, so you're right. I mean, NVIDIA has a 40% plus revenue exposure to the 4 hyperscalers. And what each of them said, and I would quote, Sundar Pichai saying the 25% of the new code is written by AI now, and Mark Zuckerberg saying Meta Llama will be 10 times bigger, the next version of the model. Those are 2 very constructive data points when it comes to the overall market. And that is what gives everyone the optimism and visibility going into 2025. Now, still there are concerns about the 2026 number because the field of the companies that are training their large language models is narrowing. No one has the capex that these 4 companies have. And even if Apple and Tesla are 2 of the incremental players, you still can see 6 or 7 companies focusing on model training. But concentration is never good. At the same time, I think the scaling laws, as long as they hold, it's a big boost for a company like NVIDIA.
When did the hyperscalers really reach the limit and how much they can expand in the United States? And I ask this because we started talking about policy mix. And there's a real question mark around national security and expanding some of those data centers overseas at a time where there have been restrictions on certain AI chips. And ultimately, those data centers in other countries could be considered exports of chips. At what point does that become a headwind to the likes of NVIDIA?
Absolutely. I mean, that is a concern given, there is so much sensitivity around the training of these LLMs. And look, Elon Musk just set up a data center in Memphis where he has a cluster of 100,000 GPUs. That was built in a span of 20 days. Now, the question is, if the scaling laws were to hold, even a 100K cluster isn't enough. There will be a 200K cluster. Do we have enough power in the US to supply that kind of data center? That is what seems to be the bottleneck, the power aspect of it. Now, I think it's the same outside the US as well. But as long as, we keep talking about NVIDIA benefiting from more clusters, more chip demand, do we have sufficient power to pull up that kind of data center right now? And I think that's where there still is some uncertainty whether we have that sort of power availability.
Mandeep, NVIDIA's huge, so we've all got exposure to it in one way or another. Can you help explain this story this morning from the information, reporting that the chip maker is facing a design snag for the Blackwell chips? Just what is going on with them? Because we see that dropping in and out of the news repeatedly and shaking up this stock from time to time.
Yes, I mean, it happened, I would say 2 months back. The stock reacted negatively after earnings, but it's run up almost 40% since then. And the reason why investors remain optimistic about NVIDIA is because even if there are delays, those companies that are training their models have nowhere else to go. It's not as if NVIDIA is doing any better in terms of the training chips or Intel is doing any better. So still, NVIDIA is the only game in town. Even if that gets delayed by 3 months, so what? The companies will wait for it. So I think from that perspective, I don't worry about the delays or the snags that much, because NVIDIA is so far ahead when it comes to the GPUs that they have developed versus everyone else right now.
Can we look at the 5-year performance of NVIDIA? 2,575%. That graphic is ridiculous. Mandeep, thank you, sir. Mandeep Singh of Bloomberg Intelligence. It's so big now. Reminds me of this note from Torsten Slok of Apollo from a number of months ago, a number of weeks ago, when he said this: it's now bigger than the total market cap of 5 of the G7 countries. Foreigners own 18% of the US stock market. The bottom line is that global equity markets, including retirement allocations to equities, are basically leveraged to NVIDIA.
Well, Jim Reed, actually, of Deutsche Bank this morning came out with a similar point, basically saying this $3.5 trillion market cap company accounts for the entire FTSE, DAX, and CAC, and has a market cap of all of these countries. So basically, it's like a whole G7 country stock market, all of them reporting at one time.
On Wednesday.
On Wednesday.
After the closing bell. NVIDIA, stay tuned for that. We talk about the Federal Reserve all the time. Chairman Powell and his big power that he has over financial markets. Jensen Huang has just as much sometimes on the equity market.
Yeah, and can you get some of the inverse reaction? I mean, what we have seen actually in recent earnings periods is the reaction in NVIDIA stock is actually the opposite of other stocks in the equity market. Does the rest of the equity market matter? We were talking about how wrong we all were about our different outlooks for this year. And let me tell you, I'm wrong every year, but I'm especially wrong this year. Not that I have an outlook, but anyway, let's move on. Really, the biggest question was how much big tech could continue gaining. And guess what? They were the leaders again. And can they continue to be in 2025?
It is always difficult to put out an outlook. I think we should acknowledge it's even harder this time around to put out an outlook. Still waiting to see who the Treasury Secretary might be. Up next on the programme, do not miss this conversation. Carl Bass of Heyman Capital Management on the race to be Trump's next Treasury Secretary and the little spat that played out over X over the weekend. Equity futures on the S&P 500 negative here by 0.1%. In the bond market, yields are higher by close to 5 basis points now on a 10-year. We're having another little look at 450, 448.69.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
60 minutes away from the opening bell. Equity futures here on the S&P 500 slightly softer. We're down 0.1% on the Nasdaq, still higher, but way off session highs. We're positive by 0.05%. With your morning movers, here's Manus Cranny. Good morning, Manus.
Jonathan, good morning. I know you spent a little bit of time digging into the narrative around NVIDIA, but it is a drag on these markets this morning. And you need to reflect. Everybody's trying to game out what Trump 2 might look like for big tech. Back in 2018, the stock crashed by 30%. That was the first sort of shock that came through. But their global dependency, 57% of the revenue for NVIDIA is on a global perspective. So tariffs may well matter, and the relationship with China will matter. China's gone from being 25% of their business in 2021 to 12% of their business. So what new headwinds may well come? Fast money's taking a little bit off. You hear that word that Blackwell may have some problems around overheating on the racks, and fast money goes straight in, takes it down, but it's had a hell of a ramp. Tesla, politics matters, access matters. Nice headline on the Bloomberg this morning that the Trump team may well look at easing the U.S. rules for self-driving vehicles. Again, this just invokes a new rampage to the upside. This is about invoking change at the Transport Department, invoking change around a whole host of administrations. That is the narrative. Of course, they don't have a self-driving car just yet. We had the robo-taxi, the stock was down 10% the day after. Liberty Energy, you're just about to delve into the various narratives around who's heading what. Chris Wright, Tap for Energy Secretary, he's got absolute knowledge of fracking, and this is somebody who's worked in nuclear, solar, geothermal, but this is his stock ramping higher. The question is, how will he manage the OPEC Plus relationship? Where is he in terms of renewables? Because he has got history and form in that area. Jonathan.
That's a man who knows his stuff. Manus Cranny. Thank you, sir. Let's turn to politics. A battle royale playing out in Palm Beach, Florida, as the infighting over Donald Trump's Treasury pick continues. Kyle Bass taking to X to advocate for Scott Bessent, calling him, quote, eminently more qualified than Howard Lutnick. Tesla CEO Elon Musk responding, quote, Bessent is business as usual, whereas Lutnick will actually enact change. Joining us now to discuss the man himself, Kyle Bass of Heyman Capital Management. Kyle, my friend, welcome to the program. Let's start with your message and your disagreement, I would say, with Elon Musk. Elon Musk making the point that Bessent is business as usual. We know Bessent, you know Bessent. Kyle, why is he wrong?
You know, Elon, I'm not sure if Elon had ever spoken to Bessent before he made that comment. And I think it's important to understand who Scott Bessent is. Scott, was the chief investment officer for the Soros organization for a long period of time. And I know for some people that sounds like a negative if you're talking partisan politics. But I think it's important to note that global central bankers around the world have respect for Bessent and his views. Scott looks at the world, with a 4D chess overlay, meaning he understands geopolitics, he understands people, he understands exactly what investment flows and economic flows matter and don't matter. So when you get into talking about tariffs, you get into talking about the bond markets, which we've had a pretty steep rise in our 10-year rate just in the last couple of months, almost 100 basis points. I think that's a worrying sign. And I think you need someone in this seat that understands geopolitics. We have a ground war in Europe. We have Israel, Iran. We're about to have China, Taiwan. And if you've got someone like Scott in there with that global expertise, who has been an investor in global macro events all around the world for decades, I look at the list of potential nominees, and the person that is correct for the United States of America, correct for the Trump organization, is Scott Bessent.
Kyle, you said that Elon Musk and Scott Bessent, you don't think spoke before that tweet. Sources have told me they did have a conversation after this spat has played out on Twitter, with Elon Musk responding to your tweet. But how much is this about tariffs, about the fact that maybe Scott Bessent will be a little bit more judicious when it comes to tariffs? And I'm hearing and reported last night that they're even considering someone like Peter Navarro, a trade skeptic, tariff lover, to put at the top role in the West Wing at NEC.
I mean, look, I'm sorry for smiling, but I think look, the tariffs that got put in the first place, the 232s and 301s, you remember the Biden administration campaigned on the fact that they were going to immediately remove those tariffs. And Emery, notice they're still in place. When you have state actors acting non-economically like China does, if they want to put our steel business out of business, they can export steel and dump it into our marketplace and take capacity utilization below our break-even point, and they can bankrupt an entire business. So when you're looking at this, forget it for a second with an economic lens. Forget about growing the economy. There are two jobs here. One is to protect the national security of our country. The other is to grow the economy the best you can while protecting our national security. So when you look at the tariffs that were put into place, those were not broad brush. We're going to show China that we're strong and they're weak. This was us protecting our steel and aluminum businesses very specifically from the threat of the Chinese government putting us out of business. So we know that we have global supply chain deficiencies. We know that all the synthetic graphite is made in China. We know that all the industrial abrasives are made in China. We know that our APIs for our antibiotics are made in China. We have to unwind that dependency there, and we have to start thinking with a national security lens. And I think when you look at the candidates here, some are domestic folks that have focused on domestic policy for a long time, or domestic business. Others, there's really only one. Scott Bessent is the one who understands the way global trade flows work, and he also understands national security.
Well, let's talk about some of the other names as well. New York Times has followed some of the reporting me, Josh Green, Saleha Mohsen have done regarding the expanded list. There's Kevin Warsh, there's Apollo's Mark Rowan, there's also Senator Hagerty, and there's Robert Lighthizer. What do you make of those other names? I think a lot of people would push back that Mark Rowan doesn't understand how global financial markets work.
Yeah, I wouldn't make that comment. I would just say that, to become Treasury Secretary, you have to divest your holdings. I think Mark Rowan's divestiture would be pretty difficult. I don't know Mark, but I have friends that know him and think very highly of him. Lighthizer has been an amazing U.S. trade rep in the past. He is, and I've read a lot of his testimony when he testifies before Congress and the Senate. He is a very thoughtful person, and he's the architect of the 301 and 232 tariffs under the last Trump organization. But is someone that focuses only on tariffs the right person for the single most important financial job other than the Fed president in the United States? I doubt it. So I look at all of these other candidates, and again, Scott rises to the top no matter who we're talking about so far.
Kyle, whether it's on X or whether it's right now, you really are backing this individual, Scott Bessent. So we have to ask, how much is this maybe a personal preference to your market positions?
Oh, I mean, I only have one market position in the public markets. I've been short the Hong Kong dollar since 2017. That just doesn't matter. And I say that meaning China, Xi Jinping has told you since 2017 that he's going to take Taiwan by force if necessary. When that happens, I think you see global linkages break. So that's not up to whichever candidate's in our treasury. That's up to Xi Jinping himself. So my market positions have no impact on who I'm pushing.
It raises a question, though, Kyle, of whether we understand the market read-through from one of these candidates and whether the market response will actually be a check on who gets selected to be Treasury Secretary. Do you believe that President-elect Donald Trump would like somebody who who would be good for market, or at least for markets to keep going up?
Yeah, of course. I mean, you know, what I'm talking about is who's best to grow our economy and also to protect our economy from state actors that say have malign intentions. And so you have to think about people that have that kind of experience, the kind of experience to understand who the malign actors are and who the good actors are, but also how do you grow, given the cards you're dealt, how do you grow your economy? The U.S. has become a regulatory superpower. The Trump organization's first moves are going to be reappoint heads of key agencies across the board. And I think you're going to see the animal spirits unleashed from the, let's say, the penalty box that they've been put in, basically by Lena Khan's FTC, and we're going to go back to old antitrust law, real antitrust law. We're going to go back to business combinations. We're going to go back to U.S. Entrepreneurship, and we're going to see the economy really grow in a place that we've seen hamstrung by the prior administration. So yes, Trump wants someone in there that's going to continue to move stocks higher. Yes, Trump wants someone in there to focus on the worrying trends in the bond market. You know, we are still running north of $1 trillion deficits if you look at the CBO estimates, and we're going to run, you know, I don't know what the number is, $1.4 trillion, $1.5 trillion this year, maybe more. And so we've got a lot of bonds to sell going forward. And you've got China's economy circling the drain. All you see in China is stimulus, stimulus. And if you remember the beginning of stimulus, you're just filling a hole. The Chinese banking system is at least $2 trillion in the hole. So their stimulus has done nothing but, you know, stabilize their market with regard to investors' sentiment. But you haven't seen any real stimulus there yet. So it's going to be difficult. We're not going to see inflows from China into the U.S. stock market. We're not going to see a lot of inflows from Japan because Japan has its own problems. And we've got a lot of bonds to sell. So who we put in as Treasury Secretary is going to be vital to the stock markets, the bond markets, and our prosperity. And again, I believe there's one candidate that understands all of that. And yes, I've known him for a long time. And it's why my confidence is so high in his ability to operate in this current environment.
Kyle, let's just finish where we started. That original tweet of yours over the weekend implied that you believe the uncertainty around this pick now is starting to have an impact on financial markets. Where do you see that playing out more acutely?
Yeah, I mean, look at the bond market. Look at the worrying trend in the 10-year. The 10-year is almost up 100 basis points. When Trump got elected, the animal spirits in the markets took off. We all saw what happened in equities and credit and even in cryptocurrencies. And now you've seen that tempered because now the markets don't have a great handle on who's going to be Treasury Secretary. Nothing's monocausal, but the markets were discounting a Scott Bessent win, and now these other names are kind of elbowing their way in to a potential nomination, and that's what's giving the markets pause. So I think the markets were discounting Scott's position, and now the markets are pulling back, wondering who else might be put in the position.
Interesting. Kyle, appreciate your time, sir. Thank you very much for being with us. Kyle Bass there of Heyman Capital Management on who he wants in that seat. Plenty of other reasons to suggest why we're seeing these moves in the bond market over the last week. That's one suggestion from Kyle as to why he thinks we're seeing these moves.
That there might be somebody who isn't necessarily paying attention to the offset of some of the increases in deficits that other people are mapping out. Also, the idea of how much we've seen a retracement in equity prices. A key question, though, still, and I think that the sort of discussion with Kyle Bass and Henrietta Trey's bookend this well. Just how much of a check does this market have on the policies coming from President-elect Donald Trump?
Couldn't agree more. One reason we've seen this move in the bond market over the last week is not just about what's playing out down in Palm Beach, Florida. It's about the Federal Reserve. Investors dialing back December rate cut bets with plenty of Fed speak still to come this week. We can catch up now with the former St. Louis Fed President, Jim Bullard, for more. Jim, welcome back to the program, sir. So much has taken place since this election. We've heard from the chairman, Jay Powell. Jay Powell suggesting to us that maybe they can pause if they want to. This is me inferring from what he's told us already, maybe as soon as December. Is that what you're taking away from recent communication?
Yeah, I mean, if it was me, I think they could make one more move here in December, and then that would put them at 4 3/8. And then there'll be a debate about where neutral is. But if you thought the median of the committee thinks neutral is maybe 3%, then you have to have maybe 100 basis points on top of that, because, or 125 even, because inflation isn't all the way back down to target. So normally you would take the inflation difference and then multiply that by 1.25 or 1.5 or something like that. And that's what a Taylor rule would do. That's going to put you right around 4%. So they'd actually be pretty close to where they'd want to be. They'd have another move to make maybe in the first quarter or second quarter. And then after that, it would depend on where inflation went during 2025. So they're in pretty good shape here, I think, for the December meeting.
Jim, maybe for December, but moving beyond that, there's a real question. I haven't heard a lot about long and variable lags in a long time. And basically, there's this feeling that maybe if markets are flying and we have this feeling that businesses are doing just fine, that everything can chug along at these interest rates. And you alluded to it, we could see a higher neutral rate. Just how much have you heard a change in tone from Fed officials over the past couple of weeks?
Yeah, well, they've made 75 basis points of cuts already, so they're not in the same situation that they were in, say, June or July. And I think the growth scare that occurred in sort of the July-August timeframe has dissipated, and now you've got GDP now, Atlanta Fed at 2.5, and the last 2 quarters of growth have been pretty strong, certainly above potential growth rate for the U.S. economy. And so I think, they don't have to go too much further to be at the right rate for this level of inflation and an economy that's, moving along pretty well. Retail sales, reasonably good yesterday.
So given all of that, I'm trying to extrapolate this out to understand what this means at the long end, what this means for the yield curve at a time when suddenly people are rethinking just how much they can cut over a longer period of time. You add to this some of the pro-growth policies that we've been talking about all morning. How much are you looking at bond yields resetting, not necessarily because of the political overlay, but because people are realizing that if it's a 4% neutral rate, a 5% 10-year yield looks pretty reasonable?
Yeah, I mean, to me, this is the last piece of the soft landing. You're bringing the policy rate down to a more neutral level as inflation goes back to target, and you would expect the yield curve to uninvert, which has happened here. And I thought that, eventually you'd have the policy rate somewhere in the 3s and the 10-year somewhere in the 4s, and you'd have this nice upward sloping yield curve. So that all seems to be developing. And that's part of the soft landing narrative, in my view.
When we heard from Jay Powell and the fact that he's talking about they're not in a hurry, how much does that have to do with policy uncertainty that right now is coming out of Mar-a-Lago, but will be coming out of Washington, D.C. for 2025?
Yeah, I think the sense of not being in a hurry, if you think about this December meeting that's coming up, there'll be a summary of economic projections at that meeting. And what the committee will do is various members will project out for 2025 and 2026 how many more rate cuts they think. But it's not going to be that many, right? Because they've already made some, and neutral isn't, won't be as far away as it was. And so then they'll say, well, some people say I only need 2 more, or other people say I need 4 more or something, but they'll spread those out over 2025 and maybe even over 2026 as inflation is projected to continue to come down. So in that sense, it will smooth out, and people will start talking about, well, maybe once a quarter, maybe once every third meeting or something like that would be the right pace, depending on how fast you think inflation is actually going to go down to 2%.
Right. So you're talking about inflation coming down to 2%, but some of these policies could be inflationary. We're talking about deregulation. We're talking about cutting taxes. And then there's this debate on how high the walls are going to go up around the United States for imports coming from China or the European Union. If that's the scenario we have, does the Fed need to think about potentially hiking?
I think we've seen this movie before in 2018, 2019. I didn't see much inflation coming from that. We had a corporate tax cut late 2017. I didn't see much inflation from that. So I don't think that that's the right narrative for this. That's not where the inflation is going to come from. Where it comes from is big fiscal spending, But if it goes straight into people's bank accounts the way it did in 2021, that's almost like printing money, and that ended up causing a lot of inflation. But if we don't get something like that, and I haven't heard anybody talking about that, then I think other types of spending are probably not, deficit spending, probably not as inflationary.
Jim, that's a fascinating point, and it really goes to the heart of something that I've seen explored in a number of research papers over the past few weeks, which is how we don't understand inflation, why the Fed got it wrong and didn't raise rates as early as March of 2022 in the face of real inflation, and going forward, our understanding of what the read-through will be from things like tariffs. Are you basically saying that some of the tariffs that we're hearing about are not going to be inflationary, and that frankly we should be looking simply at a cash infusion, at helicopter money, as the only source right now of the inflation that we've seen in the post-pandemic era?
I mean, inflation is a monetary phenomenon. That's why they call it monetary policy. And it's the job of the Fed, especially, to keep inflation expectations under control. So you could argue about an inflation expectations channel here. If people start to worry that the Fed's not going to do its job, that would be a serious concern, I think, for the inflation outlook. But tariffs themselves, kind of a double-edged sword. They rearrange the prices somewhat. But they also change demand for the imported good, and you've also got what's the reaction of the foreign country going to be. So a good outcome would be is that you get serious here and you tell the rest of the world, which is pretty protectionist, you tell the rest of the world, you know, the U.S. is going to play tougher here, and we want you guys to lower your tariffs. And those guys could say, hey, well, you know, we agree, and we're going to lower our tariffs. So you get just a lower tariff environment out of the whole thing. That would be very consistent with sort of the Trump negotiating sort of view of the world.
Jim, we won't ask you for your favorite Trump Treasury Secretary. We'll let you go. Former St. Louis Fed President Jim Bullard. Jim, appreciate your time, sir. Thank you. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President-elect Donald Trump has chosen Brendan Carr as his next FCC chair. Carr is currently serving on the commission and has served at the agency since 2012. In a statement after Trump's victory, Carr said his priorities include having a, quote, important role to play in reining in big tech. The FCC, of course, does not directly regulate tech, but it does oversee parts of the sector like broadband access and net neutrality. New York City transit officials are voting today on a revised congestion pricing proposal. The plan would charge drivers $9 to drive into large sections of Manhattan starting in January, and then increase to $15 by 2031. The initiative will still provide the city's transit system with the $15 billion it needs to upgrade its more than 100-year-old infrastructure. Officials then are seeking to start the fee on January 5th. Netflix has announced that Beyoncé will perform during its first ever NFL Christmas game day matchup between the Houston Texans and the Baltimore Ravens. Netflix is using the opportunity to put on a Super Bowl-style show, with this marking the first time Beyoncé will perform songs from her Grammy-nominated album Cowboy Carter Live. Netflix made a 2-year deal with the NFL for Christmas telecasts in 2025 and 26. And that's your brief, John.
Danny, thanks for this morning. Up next on the program, we'll set you up for the week ahead. A ton of earnings, including results from NVIDIA.
Don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The opening about 35 minutes away. Your trading diary looks like this. Tomorrow, earnings from Walmart and Lowe's. Wednesday, Target and Nvidia out with results, plus some Fed speak from Cook and Bowman. Thursday, jobless claims and more Fed speak from Austin Goolsbee. And finally on Friday, PMIs and UMich sentiment. Final word around the table. Bramo.
We can finally make earnings great again, because ultimately I think that the politics is not fading, and it's not going to fade for a long time, but people are focused very much on whether we are seeing growth and acceleration in the earnings to figure out whether there's going to be another leg up, whether it's bond yields or whether it's in the equity market.
Well, I'm gearing up for another episode of Game of Thrones to figure out.
It's been quite entertaining so far.
It's been quite entertaining. I have to say I didn't actually take any days off this weekend. I was working the entire weekend. And the fact of the matter is, I just want to know, and you said it earlier, this Dick Cheney move by Howard Lutnick, does it spoil the chances for Scott Bessent? Do we see a dark horse candidate really rise to the top now?
I think we're all on the same page. Whoever gets the nod will go some way, for many people in this market, for defining for them how sensitive the Trump second term will be to equity markets. Equity futures right now positive by around about 0.1%. Coming up tomorrow, Russ Kostrick of BlackRock, Senator Bill Hagerty of Tennessee, reportedly in the running for that seat, Emily Rodman of John Hancock, and Lara Rame of FS Investments. Big show coming up tomorrow morning. Looking forward to covering it with you. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do three things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go see high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
The past couple weeks, even as some of those Trump trades reverse in the stock market. The bond market currently higher by about 2 basis points on your 10-year Treasury yield, knocking on the door of 4.5%, Matt Miller.
All right, I'm taking a look at NVIDIA. Dan Curtis, our London producer, put together a really cool chart. Now, in blue, you see the NVIDIA share price. In white, you see the PE ratio, forward-looking PE ratio. I think it's great that as they put out better and better profits, the PE ratio continues to come down while the stock keeps climbing. We'll see if that happens again on Wednesday as we get geared up for NVIDIA to report.
We're going to watch some stocks moving pre-market as well while we wait for that NVIDIA result. Tesla higher after the Trump's transition team told advisors that they plan to ease U.S. rules for self-driving cars. You now have Tesla up about 6.6% pre-market. Also watching Liberty Energy, also surging after Donald Trump nominated the company's CEO, Chris Wright, as Energy Secretary. Liberty coming out this morning announcing a new CEO if he does get that confirmation, of course. Liberty now up 5.7%. This is a $2.7 billion oil field services company. And as Matt was talking about NVIDIA, it's actually down 2% this morning. That's on a report that they're asking suppliers to change the server rack design for the new Blackwell chips. And remember, as we've been talking about, that big earnings report on Wednesday is really one of the bigger moments of the week.
Too hot. The servers get too hot. They need to be redesigned. Apparently, they're gigantic. Those servers with all the GPUs in them are taller than your average refrigerator and weigh 3,000 pounds. Which I think is appropriate because they probably cost like $1 million. Katie.
You know what else also got a little bit too hot?
the S&P.
I'm
I
talking
was
about
just
the
gonna
S&P
say.
500. I want to look at the 1 month view of the S&P 500. It's pretty amazing. It's the similar chart too. If you take a look at the Nasdaq 100 as well, hopefully we'll pull it up. But over the past month, the S&P 500, we're still higher than where we closed on election day. But remember that huge rally that we saw the day after? We're now below that. All of these Trump trades, this enthusiasm that we're seeing, starting to eke out of the market, especially as traders question whether the Fed is really going to deliver when it comes to that rate cut.
One of the worst performers in that time, I think, was interesting. It was real estate, interest rate sensitive. But actually, what I think is also interesting is the worst sector performance is actually healthcare. Remember, a lot of those vaccine makers last year dropped after his pick as Robert F. Kennedy Jr. for Health and Human Services Secretary. So policy is made by people, and of course, the sectors are reacting to it.
Yeah, here's the chart that Katie was
really
referencing.
Gentle hill.
I thought, you know, when you first said this, I thought, well, you know, it was up 4% after the election, and then came back down, but still we're up 2%. But you made a great point, which is that we haven't gone higher than November 6th.
Yeah.
So we're still there.
There was only one day where we closed about over 6,000. That number that we spent all that time talking about.
Well, we'll continue.
Only one day.
We'll continue to focus in on it. One way you could make those gains better is by pairing your S&P purchase
What a great idea.
with a sell of the Euro Stocks Index. And that's just what Lucy Baldwin did. Let's bring her in, Global Head of Research over at Citi. Lucy, you put on that pair trade apparently on Election Day. Is that a long-term view? Is that a tactical play? How do you see it?
Hi, Matt. Great to be here with you. Thanks for having me. Yes, you're right. As you're discussing, right, there's a lot of policy uncertainty now that's playing out. And I think part of the reason we obviously put that initial trade on to be long US stocks, short European stocks, was exactly predicated on many of the themes you're talking about, i.e. the risk of tariffs, the risk of US exceptionalism continuing, etc. But what I would say is that is no longer our key trade. We have just recently upgraded from an asset allocation perspective, Europe, to say that you actually should barbell it now. And let me tell you a little bit, Matt, as to why we think that's the case. If you think about the policy uncertainty everybody's grappling with now post-election, you've got four broad buckets. You've got the sort of more negative growth, risk of higher inflation policies around immigration, but, you know, and obviously the impact that a reduced supply of labour markets might have on inflation. People are trying to grapple with that, understand what that looks like. And obviously the tariff piece, is that very broad or is that very narrow? Again, the risk that that's a negative shock to the US. And then offsetting that, you've got the much more pro-growth policies around deregulation or a regulatory reset. And again, within the US market, there's an awful lot of opportunity, I think, still in equity markets when you think about how that's going to pan out, even with the moves we've had, particularly if you look at financials, if you look at climate and energy, if you look at the sort of broad antitrust agenda. So there's opportunities there in the US. And then the sort of fourth bucket, I think when you add all of that up, is going to be fiscal. So although we still like the US, we've actually just upgraded Europe because we think actually right here at these levels, there's an opportunity for that barbell approach.
Right. So, Lucy, it sounds like that was a trade. Let's talk about investments going forward. You mentioned fiscal as well, and I want to talk about the potential pick for U.S. Treasury Secretary. Obviously, all eyes on Wall Street are trained on Mar-a-Lago right now, trying to game out who will actually get the job. You write about Scott Bessent in your note saying that he should prevent the worst on the rate side. How disruptive could it be if it wasn't a Bessent, if it was maybe one of these other contenders, some of these names that have been floated over the weekend?
Yeah, look, I think to your point, right, you've seen quite big moves in the back end of the curve since the rate cuts in September. I think the back end of the curve's up around 85 basis points. There's that risk of higher inflation, higher rates. I think, as you pointed out, the Bessent scenario, people felt that he would be very careful on the deficit, right? And so he wouldn't allow that perhaps to continue to balloon, despite obviously the concerns around that elevated fiscal spending, i.e. not just the extension of the 2017 tax cuts, but also also obviously the potential for corporate tax cuts going down to 15% and a whole range of other things. People thought he would be quite careful offsetting that with other things, including raising revenues from trade and also things like slashing the government spending. And there's clearly an agenda that we've seen with Musk and Trump's comments around being quite radical and disruptive, thinking about that. In fact, one of the baskets that a lot of our clients are really interested in is looking at names in Europe that might be exposed to US spending cuts as we go forward. So I think to your point, if we don't go down the route of having someone who's going to really balance the books, there's going to be a lot of questions asked around that fiscal sustainability and around US government debt and who the next buyers for that are going to be and how much further the back end of that curve could move.
Lucy, what about some of these other nominees put forward by the president-elect? Because you look at Chris Wright for Energy Secretary, RFK Jr. for the Department of Health and Human Services. When you look at some of these nominees, how much do you have conviction or lack thereof in certain sectors? Would you advise clients to put those trades on now?
Well, I think what you have to do is have a broad, diversified portfolio here because that policy uncertainty, the magnitude, the timing, the sequencing is still very unknown until you know who's in the key seats and what those policies are, right? And a good example of that is obviously trade. We don't know yet whether it's going to be very narrow and targeted, for example, just towards China, or whether the trade policies are going to end up being much broader, much more all-encompassing, and might target a number of countries. And that can obviously have a series of fairly negative demand shocks, not just in the US, but for the rest of the world. So when we're talking to clients, that's why in equities, we actually now like this barbell approach of being long both the US and Europe in equities. We like within credit, for example, high yield. We think there's still opportunities in government debt. You know, I think there's a much clearer path to rate cutting that we and others see for the ECB, given some of the structural pressures in Europe. Obviously, there's already an element of pullback that the market's expecting in terms of how much the Fed can cut from here as we go into next year, whilst this uncertainty remains. So I think having a broad, diversified portfolio is really important. But even within the US market, where our bull case for the S&P is 6,100 currently, you know, we're still working through what is that magnitude of growth that you can see from US stocks next year. You know, it's probably high single digit. So that's probably going to mean your upside to US equities next year is going to be high single digit, maybe 10% max. It's not going to be a repeat of this year's performance. Hence that view, it's not just about big cap US tech. You probably want a broadening approach to encompass more stocks in the US that are going to benefit from a series of different policy changes in different places, as we said, whether that's deregulation in certain cases or other things, so that you're exposed to more alpha opportunities across asset classes. And I think that's going to be really important as we head into next year for clients.
All right, Lucy, got to leave it there. Really thoughtful way to kick off the trading week. That is Lucy Baldwin of Citi. Meanwhile, we check on these broader markets right now. You can see a little bit of a rally underway, and I stress a little bit. The S&P 500 up about 0.1%, a little bit more if you take a look at the NASDAQ 100 and the small caps. But let's look under the hood right now. We'll do that with Abigail Doolittle.
Well, one stock helping those index futures, at least the S&P 500, and I believe the NASDAQ 100 super microcomputer SMCI right now up 9.8%. This basically after this wipeout fall from the recent high of earlier this year, down more than 80% on accounting fears. Well, today is the day where they either need to file that delayed 10K that has caused so much of the selling announced back in August, or they need to file some sort of motion with the NASDAQ to stay on that exchange. Some sources are saying that the latter is more likely. Either way, there seems to be a little bit of a relief rally. Turning to the shares of Astera Labs, another chip company, we see, well, Merrill Holdings, it's down 6.4%. This after Bitcoin is still above $90,000 per dollar. However, off of the highs, the technical's pretty stretched, so maybe some investors taking chips off the table after the massive, massive rally for these crypto stocks. And now Astera Labs, I believe we are going to see a nice gain for this chip company, up 3.8%. Citi has initiated with a buy. They are saying that this stock and company offers a unique AI opportunity, that the PCIe retimers are used in a lot of AI servers, and you can see shares responding in a positive way, Matt.
All right, Abigail, thanks very much. We're going to focus in on, obviously, because NVIDIA reports we're going to focus in on the spending at data centers. A lot of people are folding in crypto to that AI play, right? I think it was Moody's that said they're going to spend $2 trillion, or we are going to see companies collectively spend $2 trillion.
Well, you think about NVIDIA used to provide those chips to crypto miners. That used to be its business, and then it was AI, and maybe now crypto is coming back into vogue.
But as we've been following it so much, that's why so many people are investing in the infrastructure play around those data centers as well. Maybe a little cleaner of a trade.
Exactly my point. We're going to focus in on that story later on in the program. Also, MicroStrategy spending $4.6 billion to buy Bitcoin. Does that company have a company, or is it just they just buy Bitcoin?
It's nominally a software company.
All right, coming up, Trump's picks for Treasury Secretary are, well, that pick is the one that is really left and getting more complicated. More on the runners and riders for that role next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Let's get now to high interest to look at what's making headlines around the world. Hundreds of HSBC managers have been asked to reapply to keep their jobs. People familiar say the interviews are already underway for HSBC's newly formed corporate and institutional banking division, CIB division. Job cuts are expected to be announced in the next couple of weeks. So good luck. Spirit Airlines has filed for Chapter 11 bankruptcy. The budget airline has struggled in the face of competition and mainly because of its failed deal with JetBlue, the government nixing that. It lists assets and liabilities between $1 billion and $10 billion. Spirit has reached an agreement on a broad debt restructuring with the majority of its loyalty and convertible bondholders, and that will zero out the shares, which I believe are no longer traded on the NYSE. New York City transit officials are meeting now and set to vote on a revised toll program that would charge most motorists $9 to drive into sections of Manhattan. The toll is set to start in January. The fee will rise to $15 by 2031. New York Governor Kathy Hochul wants to push through the congestion pricing policy before President-elect Donald Trump, who opposes the fee, takes office. Shonali?
And we're now looking at the incoming administration's picks for press secretary, energy secretary, and the FCC, all set. But the president-elect has not picked his Treasury secretary yet. It was expected last week, but over the weekend, instead of narrowing the search for a final candidate, the search fell into disarray, and the former president is reportedly getting irritated at the jockeying going on behind the scenes. Anne-Marie Hordern, who is all behind the breaking news, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance, joins us now on set. Two main questions for you. One, is this jockeying going to ruin Scott Bessent's chances to take the helm at the Treasury? And also, Mark Rowan, what a dark horse.
True. Okay, so first question. With Howard Lutnick now basically, as sources are telling us, being offered maybe an off-ramp. They're looking at where else he can go, maybe an ambassadorship, something that is fancy, maybe the Court of St. James, something along those lines. If he was able to take that, does this mean Scott Bessent could just rise to the top? Or is this fight, as someone described it to me, as a knife fight, with Howard Lutnick being the one really to draw the knife first, does this mean that potentially it's going to sour the potential for Scott Bessent? Are they almost attached at the hip now in front of this fight? And the fact of the matter is, it seems to have annoyed President-elect Trump, the fact that this has spilled out into the Twitter sphere, that they are now looking for other individuals like Apollo's Mark Rowan, like Kevin Warsh, like Senator Hagerty, who is back in the mix, and he's joining us tomorrow on Bloomberg Surveillance. We could talk to him about that. These are some of the other names that are now being discussed because it's become such a fight. But the whole thing is bizarre because the president-elect ran his entire campaign on the economy. So you would think this would be the team that he would have ready to go when he starts announcing his transition.
I will say Senator Hagerty was on Balance of Power last week, and he told them there's a pretty thin majority in the Senate, so he might want to stay there.
Yeah,
you know?
that's fair.
But he comes from Tennessee.
Yeah.
So it's not like the Tennessee governor is going to pick a Democrat to go fill that seat.
That's true.
Fair play.
It is really interesting, like Shonali mentioned, the dark horse of Mark Rowan. You also have Kevin Warsh, who we know that President Trump likes. He was in consideration to be Fed chair over the first go-around. But talk to us a little bit about what support Bessent still has out there. Of course, I know you spoke to Kyle Bass just a little bit earlier.
So Kyle Bass is one of the reasons why this kind of Twitter feud happened, with Elon Musk taking Howard Lutnick's opinion of where things should go. And when Kyle Bass came out and said it should be Scott Bessent, Elon Musk quote tweeted that and said, actually, you're wrong. He's business as usual. Here's what Kyle Bass had to say to us last hour on why he's not just business as usual, but he's an important pick for the Treasury.
Global central bankers around the world have respect for Bessent and his views. Scott looks at the world, with a 4D chess overlay, meaning he understands geopolitics, he understands people, he understands exactly what investment flows and economic flows matter and don't matter.
What a veteran investor like Kyle Bass is saying basically is you need someone that understands financial markets, and not just financial markets in the United States, but global financial markets. We also heard that as well this morning from the Wall Street Journal editorial, which I'm sure President-elect Donald Trump would be looking at, which basically said Elon Musk should not be putting his finger in this fight.
I'm wondering about that. I mean, I've heard reports that Trump is fuming, is the word used, I believe, with Howard Lutnick, attempting to put himself ahead of everyone else as part of his job running the transition. I've also heard he's annoyed with Elon Musk, who seems to be with him all the time, and apparently not just, staying at Mar-a-Lago, but also flying to New York to watch a UFC fight with the president. And by the way, the president flies to Madison Square Garden to watch a UFC fight?
Well, he was with Dana White, who's one of his closest friends and allies. Dana White left vacation to notoriously go speak for him at the RNC. So I imagine for President-elect Trump, it was a big deal to show up for that individual. But to your point on Elon Musk, they're almost attached at the hip at this point. And he is a self-described first buddy. And I think that's unnerving a lot of individuals around the transition, because Elon Musk is, deciding that he should have a say on almost everything. When it comes to Howard Lutnick, and we talked about this last week, this is the producer. This is the man who should be vetting every candidate for these jobs, and at the last minute, put his name into the ring to be the star, to rise up and potentially become the Treasury pick. And that is why it has caused a tremendous amount of tension, and potentially it is the reason why, and I'm just speculating here, it is the reason why Treasury now might be one of the last positions we know about. We got state, we got AG, we got defense, and we're still waiting on Treasury, which we know is near and dear to President-elect Donald Trump's heart.
And also not just about economic policy, but sanctions policy and a lot of pretty critical things. That will require a lot of skills to run that office. Anne-Marie Horton, we are so thankful to have you today. Of course, amazing reporting over the weekend. That is Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Now, coming up a little later, we're going to talk to Wall Street lawyer Richard Farley, who joins us in the next hour to weigh in on the incoming Trump administration. Richard is in the running for SEC chair, according to Bloomberg reports. We'll ask him all about the future of regulation next. This is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg.
We are moments away from the start of trading. The first day of this week. It is a Monday. Happy Monday. This is Bloomberg Open Interest. I'm Matt Miller. You can see futures are up just barely on the S&P 500 right now. A little bit better on the NASDAQ as Tesla rallies after a Bloomberg scoop that the Trump administration is going to help approve self-driving cars across the country. There you hear the opening bell. It is, I believe, Axalta Coatings ringing the bell for their 10-year anniversary of the New York Stock Exchange. Down at the NASDAQ, you've got Fortinet, so they do cybersecurity. I thought it was interesting. Over the last 10 years, Axalta Coatings is up 84%, missing by about half the benchmark. Over the last 10 years, Fortinet is up 1,648%. So that would have been a good investment. In terms of investments this morning on the index level, Katie, what are you seeing?
I'm not seeing too much, but I am seeing green, Matt, and that is good news after the week we had last week. The S&P 500, it's green, but it's pretty much unchanged. An optimist would say we're still a little bit higher right now. We are truly higher when it comes to the NASDAQ 100, currently higher by about 0.2% on your big tech benchmark. We'll see how durable that is, of course. Same thing, too, if you take a look at the small caps, a little bit higher right now as the S&P 500 decides what to do, but the small caps currently higher, 0.2%. There's more action under the surface right now. I want to take a look at shares of Liberty and Oklo soaring after Donald Trump nominated Chris White as Energy Secretary. Wright is, of course, the CEO of Liberty. He serves on Oklo's board right now. You can see that the market is deciding that is good news, sending shares of both stocks higher right now, Sonali.
And more Trump transition news over here too, Katie, sending a stock higher. And of course, that's once again Tesla, up about 4.7%. The transition team told advisors that they're planning on easing the rules for self-driving cars, which would then be a boost to Tesla's own efforts, Matt.
And NVIDIA shares are falling this morning after a report that the server racks for the company's new Blackwell chips are too hot. They're facing a design problem. NVIDIA posts its quarterly financials on Wednesday after the market closes, and we're very much looking forward to that. For a deeper dive, let's bring in Bloomberg's Abigail Doolittle. Abby, what do you got?
Well, here is the decline on the day, down 1.5%, but to your point, down 2 days in a row. Lots of volatility here for NVIDIA, but nonetheless, around 140, so near the highs of the year. Big rally for this stock, so lots of pressure on the quarterly report later this week. Now, something to point out, the growth will be phenomenal. They're expected to report 74 cents in adjusted earnings on $33.2 billion, but it is declining growth. This represents roughly 84.2% growth on a year-over-year basis. And that is down from 100% growth and down from nearly 600% growth. So moving in the wrong direction. As for the gains of NVIDIA, it's 25% of this year's rally for the S&P 500. Last time I looked, around 25% growth or 25% gains on the year or so. So lots of dependence on NVIDIA. This quarter has to come in well. We may now have that declining growth board. I'm not quite sure. Let's take a look at what we have next, that declining growth. Again, something to think about. No, we actually have, this is a really interesting look. This is a great chart here. The S&P 500, excuse me, the SOX, 73% of the members are more than 20% from the highs. That SOX really caught in this bearish diamond top pattern, suggesting that investors are slowly but surely taking profits there. And then you can see healthcare, energy, technology, material staples. Also, you have a good portion of those members from 20% or more from the recent high. But that SOX, that's really something to take a look at, Katie. And that NVIDIA report on Wednesday, it will be, as you know, all important.
All important, and a real choose your own adventure with the charts. Abigail Doolittle, thank you for rolling with it. And let's broaden out this conversation right now with Michelle Weaver. She is U.S. thematic equity strategist over at Morgan Stanley. Great to have you in person with us.
Thank you for having me.
I want to talk about the thematic portion of your title, because when you think about the themes and the narratives that are going to drive this market from here, what is top of mind for you?
I think one important thing, so we're obviously all thinking about what's going on post-election. Reshoring is a really exciting theme that's coming back to the forefront. And I think it's really moved in fits and starts. So under the initial Trump administration, that really lit the initial fire for industrial production to start coming back to the U.S. Then you had COVID come in and you saw supply chains completely snarl and shut down. And now we think that the next wave, the second Trump administration, will drive that even further. Our industrials analyst actually estimates that this is a $10 trillion opportunity. So this could be huge for the U.S.
Hang on, what is a $10 trillion opportunity?
The reshoring, U.S. industrials coming back.
That's a massive number.
That is a massive number, absolutely. That's why we're so excited about it. And this isn't just a story, though, of we're closing factories in Asia and then moving them back to the United States. Manufacturing is a growth market. The pie is getting bigger. So not only would you see some closing of overseas manufacturing coming back, but also just locating your new incremental factories in the United States.
I was going to bring up $1 trillion.
That's nothing.
Because that's what Bloomberg estimates companies are going to spend on, I think, data centers, electric infrastructure, and telecoms networks for AI. In fact, Moody's says $2 trillion over the next 5 years. And I was thinking, we haven't seen that much investment outside of a war since forever, right? It's only war needs $2 trillion in a 5-year time period. Isn't that like the biggest theme that there is?
So this is a multi-decade opportunity. This isn't 1 or 2 years.
The reshoring
This is the reshoring
theme. AI,
yes.
Moody's says $2 trillion in 5 years. I mean, that's a relatively short period of time to spend $2 trillion.
That is absolutely a huge number, but we're seeing it's not just tech companies. It's everyone is trying to get into this AI theme, and we think that that's going to continue to broaden out. Companies are going to continue to adopt. We've done survey work that shows that it's really next year where you're going to start seeing AI go into production versus into more of a testing phase. Largely, we've seen, you give it to your programmers, you're trying to see what can go on with the R&D phase, but we haven't seen many results yet, and we think that that's going to start hitting next year.
I want to understand how these themes play into the broader market view, because you have your team raising the S&P target for next year to 6,500, and if that's true, that's roughly a 10% or more, 11% upside to where you saw more recently. So what
Same as Mike Wilson's target.
Right, they're on the same team.
Yeah.
And so the question I have is, how can you be so sure that the negatives that will hit certain sectors won't offset the positives that you might see?
So we have quite a large range. I think it's not just, okay, great, the market's going up 11% next year. We saw so many rotations under the surface this year. Beginning of the year, okay, are we going to have no landing? Is inflation going to continue to be problematic? Then we went to, okay, are we going to have a soft landing, then a hard landing over the summer? Now we're back into the soft landing camp. So you have to give room to maneuver under the surface, but we think overall the direction of travel is positive.
Let's talk about where the consumer wraps into all of that, because you've gotten retail sales strong, consumer confidence surveys are strong. We have an interesting round of retail earnings coming up this week. Walmart, Lowe's, TJX, the list goes on. And even with those strong readings that you're seeing at the survey and data collection level, you're not necessarily seeing it broad brushstrokes in all of those retailers.
So I think it's really a question of the aggregate versus the average. So if we look at how the consumer is doing at the aggregate level, the economic data is still coming in very strong. But we do a lot of proprietary survey work asking people about their attitudes, their spending plans, and we found that the average consumer is still feeling the impacts of multiple years of inflation. They're still being a little bit more selective. They're still seeking value. But we are seeing some signs of a more positive picture for consumer companies. We recently ran a survey looking at plans for holiday shopping, and we had more positive reading this year versus the past 2 years. So we could see some spending start to pick up more broadly.
Are you concerned about, inflation due to tariffs, tax changes, immigration, leading to, the Fed not only not cutting rates, but as some have warned, actually having to raise rates?
So I don't think a raise is necessarily on the table here. It could impact the path of what's going on with rate cuts. It's too soon to tell. Is it going to be a universal tariff? Is it going to be more targeted on a specific region? Our economists recently took one rate cut off the table, so now they're at another 100 basis points of total cuts through May. They were at 125, so we're seeing a little bit of pullback there, but it's really still too soon to say.
How would that impact things outside of the S&P? We talk about the Russell 2000 so much, and if you don't see those rate cuts, if you see those rate hikes, as Matt was suggesting, does that mean the Russell 2000 case gets wiped away?
So for the Russell 2000, we're really neutral on large cap versus small caps. The time you want to buy small caps is when you're in a recession. That's the time that lower quality names, you get that washout, and then they're able to reaccelerate higher. They're really an early cycle play. So we think it is still too early to be buying small caps. Neutral position seems to work there best.
All right, Michelle, good place to leave it. Really great to catch up with you, kick off this trading week. That is Michelle Weaver of Morgan Stanley. Now, coming up, the Trump team is looking to prioritize federal framework for self-driving vehicles. And surprise, that's good news for Elon Musk. That conversation up next. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. A quick check on stocks. Of course, we are a couple minutes into the trading day. We still have green on the screen, at least for right now. We'll see what happens between now and 4 p.m. But your S&P 500 higher by about 0.1%. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, HSBC upgrading Moderna to a buy from a hold with a $58 price target. The analyst says that the market isn't giving enough credit to the firm's pipeline. Next up, we have CVS upgraded to overweight over at Wells Fargo, with the analyst noticing that the Medicare Advantage risk-reward looks better under Republicans. And finally, you have Baird upgrading Roku to outperform with a $90 price target. The analyst citing meaningful changes in the business and the attractive long-term opportunity. Matt, that is a quote.
That is a fantastic quote. I'll remember that one. I want to take a look at some of the auto stocks that we're following today, and I guess tech stocks. What's Tesla? What's Mobileye? Really a tech stock there. Companies linked to self-driving cars are on cruise control this morning. I would say they're accelerating. Members of the Trump team have told advisors they plan to prioritize a federal framework for fully autonomous vehicles. Here with more is Bloomberg's David Welch. David, this, I mean, it couldn't have been completely unexpected, right? It's a huge part of Elon Musk's pitch, and he has been essentially the co-president-elect. So what do we know?
Look, Elon himself said on the third quarter earnings call that he favors some sort of federal framework or federal set of rules for autonomous vehicles. We don't really have one right now, and we don't know exactly what the Trump team wants to put in place, and honestly, they may not know at this point. We just know that it's a priority as they look to name a new Department of Transportation secretary, and that's in the works right now, expected maybe this week or next that they'll actually name that person. But one of their priorities, among others, the Department of Transportation job is actually pretty big, but one of them is to get some sort of set of federal rules on autonomous vehicles. Right now, if you want to run vehicles without pedals, without a steering wheel, you have to get a special exemption from the National Highway Transportation Safety Administration, which is part of the DOT, and they will grant you the right to have 2,500 of those vehicles max for 1 year. There have been pushes in the past to get up to 100,000 of them per year that have gotten nowhere. There have also been a lot of attempts at legislation that would create a federal framework over AVs, and they've all gotten bogged down in either the House or the Senate, either because organized labor opposed or the trial lawyers opposed it, and it's just never really come through. You would probably, honestly, to really scale up the way Elon Musk wants to, you would probably need an act of Congress, but NHTSA does have some powers to expand the rules to get more vehicles on the road, and that would increase testing and potentially be enough for somebody to start a business in certain cities with robotaxis. So not sure exactly what they would do, but the fact that they're willing to do it could kind of break a logjam that we've had over federal rules on autonomous vehicles going back 2 administrations.
To the point you were making on Congress alone, David, what do you make of these market reactions? Do you think that they're overblown, given all the hurdles that you just lined out?
Yeah, look, there's a lot that needs to happen in order to really enable the kind of robotaxi fleet that Elon Musk is talking about, including letting people who own vehicles lease them out. He's talked about that in the past, just selling a robotaxi. General Motors has tried to get an exemption for their Origin shuttle for 2 years, and they finally gave up on it. And so does regulation at the federal level help them do that? Quite possibly, but yeah, until we know what it is, until we know what's being proposed, all it is it's a priority. And look, the market is betting that with Republican control of the House and the Senate, that if they want to do something on a bigger basis through Congress, they can get it done. And they probably could, given the majorities they have. The wild card here is Donald Trump himself. He said in Michigan that he didn't really like robo-taxis and he wanted to get them off the road. Now, Elon Musk spends a lot of time at Mar-a-Lago, and maybe he's convinced him otherwise. But getting some rules on here is a start. It's a big start.
Well, David, I'm glad you brought that up, that Trump has said he doesn't like robo-taxis, because he's also said that he doesn't really like the EV industry either. So obviously the market is taking what we learned today as good news, but weigh that out with the fact that Trump is planning to nix the tax credit for EVs. How does it shake out overall for Tesla?
I think Tesla has, Elon has sort of indicated that it would hurt the others more than him, so he's not so worried about it. And I think it does give him an advantage because he can make money on these vehicles and he can sell them in big numbers without a $7,500 tax credit. And it hurts the companies that are still trying to build scale. And it increases their losses in most cases, or General Motors is getting close to making a profit on these. They're supposed to be making variable profit this quarter, and that includes some of the tax credits that they get on the manufacturing side. That's a different credit, and it does help them sell more, so that could set their EV program back as well. And if you do that and you still need to meet clean air requirements in California, say, and the conventional auto companies are selling fewer EVs, which would help them meet that, then they have to go crawling back to Elon and buy EV credits from him to meet regulations in California and in other places. So you could see some kind of chess scenarios here where it benefits Elon Musk more to get rid of those credits or to water them down than not. It's not as easy as a snap of a finger to do that. Congress needs to vote on some of these things. But again, Trump's got a majority and he may be able to do it.
All right, David, thanks very much. Bloomberg's David Welch there reporting on the potential for an easing of self-driving car regulation. Coming up, bankers and the titans of private capital want to team up to fund a $1 trillion AI spend. We'll take a look next in today's Wall Street Beat. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
This is Bloomberg Open Interest. We're taking a look at the stock market, now turning lower on the S&P 500, down in the red, just a hair, but still still counts there. You take a look at the NASDAQ 100, trying to hold gains for that big tech index, higher by about just 0.1%. Same story, too, if you take a look at the small cap Sonali, currently higher by about 0.1% on the Russell 2000.
And Katie, we're going to shift gears for the Wall Street beat now. We're going to talk about the $1 trillion AI hysteria that bankers are taking a look at. They are looking for a piece of that financial pie. That's the subject of today's Big Take. Neil Callanan co-wrote the story, joins us now. We're looking at picks and shovels, and one kind of centerpiece of this story is just how much Wall Street is banding together to get this done. Is the money there at the end of the day for this grand ambition?
Absolutely. At the moment, everybody wants a slice of this pie. It's the new gold rush. You know, bankers have had a tough couple of years. M&A hasn't recovered. Leveraged loans are the leveraged loan market has been suffering, and so everybody wants in on this AI-driven boom. There's some skepticism as to whether the technology will actually be successful, but the amount of checks that are being written and the size of those checks means all the Wall Street banks see a great opportunity here, as do the private capital providers as well.
Yeah, normally they would be competing, right? But I thought the interesting piece from this story is that regardless of whether or not the technology is successful, Bloomberg estimates we're going to need to spend $1 trillion just to get the data centers up and running and, you know, connected to networks. Moody's says $2 trillion, and the banks just don't have enough firepower. They need to team up with private equity, private credit in order to finance this.
Yeah, these are huge numbers, and the message from the banks is let's work together because we can both make a lot of money if we do this going forward. And that money is there. You know, private equity has been raising a lot of dry powder for this. To give people an idea of what we're talking about, the power needed for AI just in the US is expected to be the equivalent of 3 New York cities. So that's a huge increase in the amount of power that's needed. And so a lot of people are more interested in investing in that power supply that will go to the data centers and AI than maybe just the data centers themselves. So that's one way of getting protection. The other way they're getting protection is these things have 25-year leases from companies like Meta and Amazon, and that's very, very, very attractive to both lenders and investors.
How concerned, Neil, are people worried about tourists? This idea that a lot of people are flying into an industry that they know so little about.
That's an issue, and a wider issue in finance when you have so much capital running around at the moment, and there will be, you know, concern that people aren't doing enough underwriting on these projects. There's talk of zombie projects where people are building data centers and then can't get power grid connections. In Ireland, there's a huge concern that without these power connections, data centers and their operators will leave the country, and that could lead to have big consequences in terms of the technology industry within the country. So there are going to be these tourist investors, but you know, the opportunity seems too attractive for them to walk away from.
All right, Neil, it's a great story. It's today's Big Take. That is Bloomberg's Neil Callanan, of course. You can find that story on Bloomberg.com or on the terminal. Meanwhile, you turn back to these markets right now, guys. You see the S&P 500 just a hair lower. Your biggest points loser right now in the index is NVIDIA. We know we've been following that Blackwell production story. We know that they report on Wednesday. You think about where we stand right now, the month that we've had in this market, that's going to be a big report in terms of sentiment.
Yeah, huge. I mean, you can't understate the importance of NVIDIA, not just in the S&P, but also in the MSCI World Index, right? It's bigger than some very large countries.
I've heard that.
Yeah, so it is key, but I think the reason it's down today is because of the heat in the servers, and that's an issue that they have to work out because there's no other supplier of these chips right now.
Frankly, I know everyone wants to talk about NVIDIA. I'm equally excited about Walmart tomorrow. It's a big week, actually, in the markets this week.
Yeah, a huge employer and a great story for the U.S. economy. Coming up next hour, we're going to talk with Richard Farley on the M&A environment and Sarah Silverstein of the Arena Group. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Stacey Lynn in Rio de Janeiro.
Ladies and gentlemen, good morning and welcome to the launching of the Global Alliance Against Hunger and Poverty.
The G20 Summit of World Leaders has kicked off with Brazil's president launching that global alliance to combat poverty. President-elect Trump is not at the summit, but the BBC's James Lansdale tells us they're talking about him.
People here are trying to scratch their heads to work out what he may do. Will he try to trigger an international trade war by imposing tariffs on goods entering the United States? Will he give the Israelis a freer hand to prosecute their war against Iran and its proxies?
Our Naomi Ruckham with new info about the man Trump has tapped for defense secretary.
Former Fox News host Pete Hegseth paid a settlement to a woman who had accused him of sexual assault back in 2017.
His lawyer said he made the payment to avoid a potential lawsuit. Hegseth has denied the allegations. President Biden is lifting the restrictions on Ukraine's use of American-supplied long-range missiles. A long time coming, says former U.S. Ambassador to Russia John Sullivan.
In my opinion, it was about time that the United States gave the Ukrainians the ability to defend themselves more completely.
A deadly human smuggling case goes to trial today in Minnesota. CBS's Jim Krasula with the story.
A 29-year-old Indian national and a 50-year-old Florida man will go on trial in Fergus Falls, Minnesota, on charges including human smuggling. Federal prosecutors will allege they orchestrated a criminal network stretching from India to Canada, making money from smuggling families seeking better lives in America. One of them was a 39-year-old Indian man who froze to death while holding his 3-year-old son in a blizzard.
The 2025 Rhodes Scholars have been announced. Here's CBS's Wendy Gillette.
Harvard University leads the list with 5 of the 32 U.S. Rhodes Scholars. 4 scholars were chosen from both Stanford University and the U.S. Military Academy, the most from West Point since 1959. Recipients head to Oxford University in London for graduate studies in October 2025.
Roblox with some new security and safety measures to protect your kids. The digital games platform is giving parents more control to see how much time their kids spend playing. They'll also get to set up daily screen time limits. And the new features will stop children younger than 13 from directly messaging other gamers. The trading days officially open for business on Wall Street. The Dow down 90 points. This is CBS News.
Conditions apply.
Air pollution is terrible in India's capital.
In New Delhi, schools have been closed, construction projects have been stopped, and non-essential trucks are banned. Visibility is so low, airlines have been dealing with delays. In some places, pollution levels are 50 times higher than the recommended safe limit from the World Health Organization. Forecast.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Well, when I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Solid rally over the last few weeks. I did miss that.
Yes, exactly. And I've been calling out crude oil in your absence because you're
thank
here.
you. I felt it.
But we're now down at $68 for WTI crude oil.
Yeah. Drill, baby, drill is, lots of oil, baby oil, and low prices, baby, low prices. All right, let's get to some market drivers here. Market Drivers is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. And for that, let's get to Abigail Doolittle, Bloomberg News Chief Markets Correspondent. Let's piggyback on NVIDIA for a moment, because that, options are pricing, a move is expected, earnings are Wednesday, and then we get this headline from the information.
Well, it's pretty important in terms of the report on Wednesday, and putting aside the news from today, that report is massive only because NVIDIA's move for the S&P 500 this year has been 25% of the S&P 500's roughly 25% or greater year-to-date move. So what they report on Wednesday is going to be key, and something that really stands out is while the growth year over year is really pretty strong for the quarter expected, I believe I'm not able to get on my Bloomberg terminal here. Next hour, I will bring in a cup of water since I'm not willing to lick my finger. Well, how many people?
Well, can't you lick it and then just wipe it, then lick it?
But don't you have the?
I've already licked it, and then I don't want to lick my finger after I've.
This is what happens. This is the background. This is how we make the sausage here, people. But how about the app?
So I don't use the app, but I do have my B unit. What I have been doing is bringing a cup of water, sticking my finger in it, and then. But the real solution, and other people apparently have tried to do, including Carol, is get new keyboards here in the radio studio. Okay. That's one possibility. That
I know a guy. I'll take
solution.
care of that.
But in any case, the adjusted earnings for the upcoming quarter expected to be, I think it's around, let's call it 75 cents. That is 84% growth on a year-over-year basis, but the quarter before, it had been more than 100% growth on a year-over-year basis, and the quarter before that, 500%, a nearly 600% growth. So growth is actually decelerating. When the street catches up to this, I think that it could be an issue. It's the case on the top line as well. So you have this stock where valuation is high, the stock is near record highs. In other words, price to perfection, they really need to perform. So now we have this news on the Blackwell servers and maybe causing a few jitters. It's going to be interesting to see what happens on Wednesday. In addition, I would note on the stocks, technically it's in something called a diamond top. It's just basically a massive consolidation pattern this year, which tends to be bearish. People who bought really well, say a year or two ago, and are up many hundreds of percent, they're slowly selling instead of right away so that they don't disrupt their profit. I bring this up because the stocks, 73% of the members are more than 20% below their peak. This is well more than some of the other sectors. So that chip sector really vulnerable. Does it have to do with NVIDIA? Right now, NVIDIA has been the star. We actually also have Super Microcomputer up today as they have some decisions to make around their NASDAQ listing. But there's some weakness showing there, and the incoming Trump administration, of course, with tariffs, that could be a little bit painful, having nothing to do with the demand issues that we're hearing about from, say, AMAT last week when they reported, and the guide for this current quarter a little bit weak.
All right, chips, NVIDIA will be all over. I'm glad I'm not on those shows that has to break earnings news at 4 o'clock.
Oh, that's me.
That's you. That's you.
Oh, that's on me.
Abigail Doolittle, thank you so much. We appreciate that. Abigail Doolittle, markets correspondent for Bloomberg. All right, folks, what would you like to hear on Bloomberg Radio? Well, you can help make shows like ours even better by taking over taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. Let's go to Enda Curran right now, global economy reporter for Bloomberg News. He joins us from D.C. via Zoom. And as a global economy reporter, what have the last 2 weeks meant for you as we try to get a sense of what will be President-elect Trump's economic agenda over the next 4 years?
Well, I suppose on one part, there's kind of an air of familiarity. It wasn't a major shock that President Trump got re-elected again, given the polls suggested it was tight. He's expected to be very hawkish on global trade policy, for example. He's expected to loosen fiscal policy in the U.S. With implications for interest rates in the U.S. and obviously globally. And of course, he has a domestic deportation program, which will impact the inflation story in the U.S. and by extension the global story too. So some of that was, broadly speaking, not really a shock to economists following the story. But the real uncertainty and unpredictability is in the details. What exactly is coming down the pipe? What level of tariffs will be applied onto what goods and onto what trading partners? That's still a very open question. A lot of economists make the point that's a hugely complicated task to pull off, for example.
And also just what the retaliation is, and then how to sort of map that out. I've also been reading on the other side of the universe here is that outside the U.S., you're going to see much more easier central bank policies and lower rates to combat any issues with tariffs, which would then be sort of bullish for those countries. How do you balance those two?
It's very tricky, Alex, because I think a lot depends on, first of all, what policies are implemented. How does that impact U.S. inflation? By extension, how does that impact the Fed? And then by extension, how does that spill over to the rest of the world? Because if, for argument's sake, yields in the U.S. are high, rates are high, and the Fed is keeping its own rates high, that will limit the scope for emerging economy central banks to respond. That's always been one of the problems that they face in a world dominated by the dollar for trade settlement and in financial markets. So what's happening in the U.S. isn't just a U.S. issue, it'll be complicating for the rest of the world too.
And what do you and other economists that you talk to, what are they thinking about tax cuts? What should the tax cuts look like? How significant could they be? What are you hearing?
I think it's, in one respect, some of the mystery has been taken away because the Republicans now had that big sweep of Congress. So that means, obviously, it clears the way for the GOP to pick whatever tax cuts they want to implement, what they agree among themselves. So that means, at the very least, that the TCJA, the individual tax cuts, will be extended. The question then becomes, what other tax cuts will be put into the pot alongside that? Will they agree on no tax on tips, no tax on overtime? Those individual tax measures will be debated. And then, of course, there's the corporate tax cut. Will that be cut down to 15%? So the big picture is that we now know the direction of traffic for taxes. It's, broadly speaking, going to be lower where they can. It's a question of what specific measures and agenda items they agree and what offsets what levers they have to pull to make sure they don't blow up the deficit at the same time. So it's going to be a tricky part of that and see whether or not the fiscal hawks and the GOP still have some sway.
Right, and which is interesting why, looking at the 10-year, it's up 4.45%. That's also a shocker to me, too. Not only have financials outperformed, but you really have that big move in the back end of the curve because of those fiscal deficits. Do we think that balance can be found?
It's kind of hard to say because, at the very least, nobody is preaching fiscal austerity in the U.S. at the moment. And if you go another step down from that, much will depend on where exactly these spending cuts will be found and where it'll be agreed. I mean, obviously we have the big headline around the new government department co-led by Elon Musk, for example, looking for supposedly trillions of dollars of spending cuts. But as one economist said to me, if spending cuts of that scale were easy to find, then they would have been agreed by now. So I think there's some skepticism that cuts on that scale will be found, which means there will be a lot of bartering and bargaining and negotiating among the lawmakers in terms of where they do agree on the cuts in the year ahead.
And thank you so much for joining us. Enda Curran, global economy reporter for Bloomberg News, joining us via Zoom from Washington, D.C. We had a guest on surveillance. I was just looking at the note here, and this is very helpful to kind of figure out what's going on here in terms of cutting costs. 75% of the costs of the budget, they're kind of entitlements.
Right,
Social Security, stuff like that. So only 25% is discretionary, and half of that is defense.
Yeah.
So there's very little wiggle room there. So we always complain about wasting spending, which I'm sure there's lots of it. We all know that. It's a lot less than we thought.
I love that you brought that up, because the Journal had a great piece out that talked about government workers, and same that you just said. A lot of them are entitlements and veteran affairs and defense and the Army and the military, right? So you put that aside, like the DOE is like a teeny tiny little bit that you can actually maybe change. We're going to continue this conversation, focus on the markets, plus the G20. This is President Biden's international farewell here. David Gura is joining us on the ground from the G20, plus Phil Orlando, Chief Equity Market Strategist over at Federated Hermes. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. Traders are waiting fresh direction on growth, also the path of interest rates. Housing, that leads this week economic data. We have this morning, we learned U.S. home builder sentiment. That reached a 7-month high after the election. That's according to the National Association of Home Builders. Tomorrow, it's on to the government's read on housing starts. Thursday, October home resales. Let's get to the stocks. The NASDAQ up 0.4% right now, 85 points at 18,760. 66. We have the Dow down 0.3%, 137 points at 43,303. We have the S&P 500 up 0.1%, 9 points, 5,880. We have the 2-year yield 4.32%. That's up 1 basis point. The yield on the 10-year 4.47%, and that's up 2 basis points. To commodities, gold rose more than 1%. Goldman Sachs analysts predicted it would hit a record $3,000 an ounce by the end of next year. Right now we have spot gold at $2,608 an ounce. Over to oil, Brent crude up more than 2.5% at $72 a barrel. WTI crude at $68 a barrel. A few companies making news. Spirit Airlines filed for bankruptcy in New York, listing assets, liabilities between $1 billion and $10 billion. And then over to HBSC, reportedly asking managers to reapply for their jobs in the firm's new corporate institutional banking division. And that's actually sparking some competition because it's pitting those senior staff who came from the commercial banking division against those from the global banking and markets unit. We'll see what happens there. CVS Health, it's named Glenview Capital Management founder Larry Robbins to its board. He's one of 4 new members. They're going to bring that board's number of directors to 16. Shares of CVS right now up nearly 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We also like to tap them outside of Bloomberg as well to get a good read on what's actually happening in the market. If you're putting money to work, what's the smartest way to do that? Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, joins me now. Phil, what's the case for not being in equities?
Well, the stock market has had a phenomenal run here. Animal spirits have returned, and from the bottom of the market in early to mid-August, a lot of the indices are up 15 to 20%. So the case for not being in equities or being underweight equities at the moment is perhaps you think stocks are overvalued near term, and you'd like to be patient and get a better reentry point in order to get back to an overweight. But if we're taking a longer cycle position and looking at the prospect of less regulation, lower tax rates, both individual and corporate, stronger economic growth, all of those things are good for corporate earnings. Ultimately, share prices reflect stronger earnings, and we could see the S&P 500, from 6,000 now, let's call it, up into the 7,500 neighborhood as we look out over the next couple of years.
So, Phil, to what extent did your, market call change the day after the election when it became apparent that not only President-elect Donald Trump coming back to the White House, but it looks like he's going to have a pretty solid Republican support in Congress? How has that impacted your call?
The good news, Paul, is it did absolutely nothing to our call. Because we were expecting a red wave, if you will, and had positioned for that accordingly in terms of overweights in domestic large cap value and the small cap categories. We had been essentially fading the dramatic outperformance of the Mag 7 names over the 18-month period into the middle of this year. And, as you look back on the third quarter and results over the last, 6 weeks or so, the values in the small caps have had a pretty good run of it. So we didn't need to make any changes after the election results became known.
What other thing I was just talking about that struck me was the rise in 10-year yield, almost at 4.5%, and the continued money into money market funds. Is that ever going to leave?
Well, there's a concern that's growing based upon developments over just the course of the last week, Alex, and I think, we've seen this with the backup in Treasury yields. We were at 350, 360 or so a couple of months ago. We're now up in that 440, 450 neighborhood, and the question is whether or not we're going to go back and retest, the 475 or 5% level we saw October of last year. The reasons for that backup, in our view, is that inflation is not going down anymore. It's sort of stalled, and based upon the wholesale inflation metrics we saw last week, are actually starting to reaccelerate. As we look ahead to the core personal consumption expenditure index that we're going to get, I think the day after Thanksgiving, the expectation is that number is going to continue to go up as well to 2.8%. Remember, the Fed's target there is 2%. You had some pretty strong economic growth in the second and third quarters, GDP, compared to the first quarter. Last week's retail sales numbers, upward revisions in September, some strong nominal or headline numbers out of October. So the thinking is that the economy's strong, inflation is sticky and persistent. You've got a red wave here that in all likelihood is going to result in stronger economic growth. Maybe the Fed's not on a glide path to, take the funds rate down to 3%, which was sort of the gist of what most investors got out of their SEP back on September 18th.
So given that backdrop, Phil, kind of where's your best opportunity after that as you look at the equity markets here? Where are you guys focusing these days?
Well, again, we're taking a longer-term view in that if we're right, that the issues that we just talked about do result in, our forecast is $350 in corporate earnings for the S&P, looking out to calendar 27. Embedded in that assumption is comparable or perhaps lower corporate tax rates and extension of the individual tax rates at the end of next year, the end of calendar 25, when they come up for renewal. Right. So as a result, as we look out to 26 and 27, the economy ought to do pretty well. So if we discount back $350 in earnings into the end of 26, that would suggest the 7,500 S&P, we're trading at 6,000 now. So if the market does pull back here, let's say we pull back to the 200-day moving average, roughly about 5,400, that gives you a couple of thousand points in the S&P potentially the upside over the next couple of years. That looks pretty attractive to us.
It sounds pretty attractive to me, certainly. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. Thank you for your time. Let's head down to Rio de Janeiro. Why not? Wouldn't you head down there? David Gurr is there. He's a correspondent for Bloomberg.
It's a nice shot he's got there. A little beach in the back. Yeah, all right.
He knows what he's doing. He's the host of the Big Take podcast as well. He's down there at the G20 meeting down there in Rio. David, to what extent is President-elect Trump and his incoming administration overhang to what's happening at G20?
It's a huge overhang here, and I should note a lot of the leaders who have made their way here to Rio have either gone through Mar-a-Lago, gone through South Florida on the way here, or planning to go through there on the way back. So they're acknowledging the fact that while it is important to talk to the current president of the United States, that's going to change in less than 2 months now, and they want to kind of get a firmer grasp on what's bluster and what's likely to be real policy from now President-elect Donald Trump. I should say, a lot of these leaders here know him, and they've been through this before. Many of them were on the scene back in 2016 when there was a huge amount of uncertainty about where things were headed, how he might govern. There is a recognition broadly among those leaders that they've got him figured out. They know how he operates. They're wondering sort of what the size of these tariffs might be, how punitive they might be, but they don't have the kind of broad unfamiliarity they did. So what we're watching for here is the degree to which, yes, they're talking about the Trump administration and what that might mean. They're paying attention to who the next Treasury Secretary might be, for instance, but they're looking at sort of the role that China might play here going forward and how these trade alliances, these economic alliances could stand to change here in the 4 years ahead.
Two of the big differences, obviously, is what's going to happen with Ukraine and, of course, in the Middle East. Is there a communique on that? Is there some kind of agreement on those two geopolitical issues?
So that communique, that statement is coming together, and this has been a hot-button issue, how they address both of those conflicts that you mentioned, the one in the Middle East and the one in Ukraine as well. And what seems to be happening is that Brazil is resisting calls to have sort of more specific nods to those conflicts and kind of keeping a broader outlook on sort of what might bring about peace in those two regions. But the Ukraine story has really become such a huge one here in the last few days and certainly front of mind for a lot of these world leaders. So you had Chancellor Olaf Scholz of Germany reaching out to Vladimir Putin, the president of Russia, for a phone conversation, which is a hugely important moment in the kind of broad history of this war. And he did that with, if not the blessing of Vladimir Zelensky, the president of Ukraine, at least he was tipped off to the fact that it was going to happen. And Olaf Scholz, the chancellor, went back to him after that phone call to update him on what's happened. And that's happening here on the ground in Rio as well. A lot of folks are lining up to talk to the German chancellor to hear how that phone call went, as we see this kind of movement coalescing to what a negotiated settlement might look like in the Ukraine conflict. So we have yet to see sort of how that's going to play out in that formal final draft document that we'll get, that final communique from the leaders here. But folks are paying very close attention to what's been happening, both in terms of the phone calls happening between Putin and Scholz, and then also the kind of ratcheting up of the conflict as well. We had this huge attack on Ukraine just a couple of days ago by Russia, and then also this news from the United States that they're willing to supply some weapons, more weapons to Ukraine to use on Russian territory. So a lot of moving parts there, and a lot that's not on the official agenda of this conference, but certainly is playing out in those conversations, those bilateral meetings that are happening on the sidelines.
David, talk to us about China. China's invested a lot in Latin America, South America over the last several decades. What's it like around President Xi of China in Rio?
He landed here last night, and that was on the heels of a bilateral meeting that he had with President Joe Biden at the APEC summit in Peru. Safe to say their last meeting they're going to have together, and it was one where President Biden kind of talked a bit about how he's advanced that relationship, both the personal relationship between he and President Xi, but also between the United States and China, and reestablished this line of communication between Washington and Beijing. But they're not having another meeting here. We've seen President Xi meeting with other world leaders, and he spoke just a little while ago about China's commitment to developing economies around the world, reinforcing a policy of theirs that they're not going to have any tariffs on developed nations going forward. And just anecdotally, Paul, walking around here, you see some evidence of that Chinese money making its way to Brazil and sort of things that they sponsor. That's true across the continent as well. So they're, continuing on a plan that's been in place here for many decades now, investing in this continent and playing a huge role. And I think, again, with Donald Trump coming back into office, a lot of these world leaders are looking at sort of the bigger role that China is likely to play here going forward, and certainly wanting to speak to President Xi himself. I should say the UK Prime Minister Keir Starmer did have a one-on-one meeting with him this morning, and there was kind of a touch-and-go moment afterward where the two leaders faced the press afterward, and Keir Starmer brought up human rights, brought up Taiwan. These are things that, safe to say, President Xi is not eager to talk about, and the press was ushered out before we got answers to those questions or any sort of response from the Chinese president.
All right, David, we appreciate that. Thank you so much. David Gura, he is host of Bloomberg Big Take podcast, joining us on the G20 from Rio de Janeiro over in Brazil. All right, coming up, we're going to talk to Neil Callahan. He's Bloomberg senior editor on Wall Street bankers going to rake in the cash on some AI hysteria. We'll get the latest.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors financial network where you can run your business with true independence, supported by unrivaled resources. Learn more at WFA.com/resources. All right, we have stocks mixed, and this is after their worst week since early September. So let's get right to it. We have the Nasdaq up 0.7%, 143 points. The Dow down 0.1%, 62 points. The S&P 500 up about 0.3%, or 20 points. Morgan Stanley's Michael Wilson says he sees the S&P 500 actually ending 2025 at 6,500. We'll head over to the bond market. The 2-year yield 4.31%. That's little change. The yield on the 10-year 4.45%, and that is little changed as well. All right, let's go back, take a closer look at the markets. Where is the biggest boost coming from? We'll use the IMAP feature on your terminal. Of the 11 major industry groups, the biggest boost coming from consumer discretionary. Then you click through a little closer, you see automobiles. I think you know where I'm going with this. Automobile manufacturers, and then at the top is who we've been talking about a lot this morning. It's Tesla. Its shares up about 8%. Then we have shares of Super Microcomputer. They're up 8%. It's approaching this deadline to either file a delayed 10K annual report or submit a plan to file that form to NASDAQ in order to remain listed. And finally, Netflix. Well, it says about 65 million people had watched that boxing match between Jake Paul and Mike Tyson on Friday. But the big problem, buffering issues, bringing about concerns over if Netflix can really handle those live events moving forward. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
Buffering, huh?
Yes, I was watching. It's very frustrating.
Well, yeah, it's live sports. You can't delay live sports.
And they're going for and then it pauses.
And then does it jump, or do you get to see it?
No, it freezes. The audio keeps going.
Oh.
So then you have to log out and then log back in.
Oh, forget that.
And then you miss everything that just happened.
See, I didn't even get to this context of her story. I was shocked that she's like a fan of this stuff.
This actually does not surprise me.
I was shocked.
She deadlifts. Of course she's a fan of boxing. Right. I mean, please. All right, this is Bloomberg Intelligence. I'm Alex Steele, Lisa Mateo, and Paul Sweeney. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. I want to take a peek in here on Bloomberg Big Take. It was quite good today. Neil Callanan is Bloomberg's senior editor, and he was one of the writers on this story. And it talks about how Wall Street bankers are looking at some serious cash, a nice fat payday, as companies pour billions into AI, whether it's infrastructure or something else. Neil joins us now from London. Hey, Neil, walk us through the kind of money we're talking about and the kind of partnerships between, say, Wall Street, the big banks, but also the private lenders.
Hi, Alex. Yeah, we're talking about $1 trillion in credit and $2 trillion in overall expenditure on data centers and AI and everything related to that. And basically, what we have at the moment is the banks and private credit providers saying the flow of capital that's needed to fund these things means that we don't even have to compete with each other because everybody is going to get a slice of the pie regardless of what happens. But having said all